Hi, everyone. Happy Saturday. Hopefully you guys can come off mute tonight and we won't have the same issue that we had last night. We're
Happy
gonna just,
Saturday.
hey, happy Saturday. I can hear you. Great, great, great.
Happy Saturday, Nicole.
Happy Saturday. Okay, hold on one second, guys. My mom is calling back from my daughter, so I'm gonna just let her know, but make another post and let some more people join, and then we'll get into it. Okay, we're going to kind of pick up where we left off at last night. And, this is really to just focus on how to build up your personal credit so you can get funding, right? Because one of the things that helped me start like all of the businesses that I did when I first started out, like, and this was like 5 years, 6 years ago now, right? But one thing that helped me was credit. I was able to get a small micro loan from the SBA. And mind you, when I got this micro loan, my credit was horrible. It was probably low 600s, but they still gave me 12,500. And that was enough to kind of get me the little boost that I needed. And when you don't have funding, it can take a little bit longer because you're investing a lot of your time into it. And for those of you that are starting a business, there's two ways that you can go about it. And one way is time. Your time is going to be needed, right? You're going to have to grind. You're literally going to have to lock yourself away and kind of cut the fun for a bit until you see some results, right? And focus on whatever it is that your business needs, right? For my business, it was content, right? Because if nobody knows you, they can't do business with you, right? So you got to get your business out there with marketing and creating the content to bring business, to allow people to get to know you, like you, trust you, right? And that can take a while too, because how many of you watched me for a while before you're like, hey, I need to learn more about what she knows and what she's got going on, right? So you have to really be dedicated to this. And then once you get enough organic content out there, you can start investing into paid advertisement. Facebook ads, there's Instagram ads, which are essentially Meta, right? And then there's TikTok ads, there's Google ads. There's a ton of different ads out there for most business owners that are heavily on social media. Your top 3 ads are going to be Meta. And for me personally, I never really had great success with Facebook ads. Although your Facebook ads is what drives the ads on Instagram, right? You never really want to boost post, even though I've had good luck in the past with it. You don't want to boost post because you have what's called a pixel, right? And your pixel inside of your Facebook ads account, it collects data. So it collects data of people that interact with your ad. And then eventually that data becomes more and more powerful, because how many of us out there have said, man, I really want to get a blue sweater, or I really want to go to, take a trip to Miami, right? Next thing you know, you're scrolling on social media and all you're seeing is what you were talking about or what you were looking up on your phone, right? Trips to Miami, and you're seeing all these advertisements because a lot of the stuff is tracked, right? Let's just be honest. So if people are looking up what your business does and you're creating ads around it, Facebook and Meta are going to push those people to your ads. So ads are really powerful, but they can be very expensive. Me personally, I've done ads and I also have done organic. And to be honest with you, I think that I spend more money on ads because of my category. Credit essentially is a high risk category when it comes to running ads. And a lot of times ads get flagged and it's a little bit harder, especially with like Google. They don't like credit repair, credit nothing, right? And with Meta, there's 4 sections that you have to select if you're like one of their like high risk categories, right? And credit is one of those categories. Now, there's ways around it. If you are in the credit business, you can talk about other things like trade lines. That's the one thing that has always brought me a ton of success when advertising for credit, because I would never advertise for credit repair, right? Because number one, you're going to have to select that it's credit and it's the high risk category. And there's so many other people out there that are advertising for credit, and you don't want to just advertise a flyer, right? They're kind of like, in nowadays when I see those, it's like boring, boring. You really have to advertise with video, right? You have to grab their attention, and you want to get, them to get interested in what you're offering. So what I like to do is I like to run a couple different ads. One ad is something free, right? To get them to opt in to your offer. That way you collect their information, right? You can follow up with them and you can see how well that ad is performing. And at least you're, getting people into your funnel that you can work with, whether they sign up with you now or, later on. Either way, it's, going to be something that you're building up towards. You're building up your arsenal of leads essentially, so you can follow up with them. Or you can offer what I like to call low ticket offer, right? Because if you're running ads and your offer is $1,000, the chances of somebody, buying from an ad is very, very slim in today's world, because a lot of people are more hesitant to spend money, right? And they don't know you, so you have those 2 factors up against you. So it's always best to advertise for something free or something low ticket, or just to book a call with you, right? Not even talk about a price, because if you put your price out there, they already know what they're having to pay, and that might just disinterest them from the gate. So you want to build up that value with people. Wanted to put that out there because somebody asked me about it. But you have to just keep it simple, get some content created, look presentable. I've told people to create content before, and then I see their content and it's like, oh, wait, I left a few things out. Number one, do not like do not record content while you're at work in your work clothing. All right. You should record content outside of work when you don't look like you're at work, right? I just think it looks better, and it gets more people's attentions. You can do anything else. You can be at the park, whatever, right? Another thing is, make sure that you are fully dressed. Okay. Why? Because number one, social media these days, they might flag your account, especially TikTok, if you have revealing clothing on. I had someone that I was working with, and he did not have a shirt on when he was recording his video. And I was like, oh my God, like, you have to wear clothing. I get it, it's hot, but you want to look very professional, right? That doesn't look professional, and it can also flag your video, so it does not post whatsoever, especially with TikTok. They do that a lot. So You know, if you get a t-shirt made for your business that looks even better, they're super cheap, but I invested in them. And I want to say that I use like rushordertees.com, right? And you can get a couple, they don't have like a high maximum or minimum that you have to do. You can really, I think, buy any amount versus like some places you have to buy at least like 12 or 24. But with them, they're pretty fast. You can buy all sorts of different types of t-shirts, polo shirts. You can get it embroidered. You can get it screen printed. But, you know, you want to start becoming a walking billboard, essentially, right? I have these t-shirts, guys. So if you are doing credit, I have a whole like store of credit shirts that are not necessarily branded to my business, but they help you become a walking billboard, essentially, because I don't wear Nike and all that stuff anymore. I used to be a huge Nike person, designer person. And you know, now I only wear my brand, right? So we have to get into that mentality of whatever you do, you want to become that walking advertisement and that walking billboard, because I get so many people that ask me, and sometimes I forget, like I have the t-shirts on. So I'm like, what are they looking at? I'm like, oh yeah, they're reading my shirt, right? And a lot of times people will ask me like, hey, how do I raise my credit score? Like, because on the back of the shirts, it says, ask me how I can help you raise my credit score, something like that. Right. So it gets a lot of people's attention. And I even had one lady the other day, she said, I like how you're wearing your t-shirt. Like, it's like literally your business asking for business. And I was like, exactly. I said, you have to be your brand. I'm not going to go around advertising Nike anymore and spending $30 to $50 on a shirt that, you know, I could probably wear 3 times because they don't wash well. I'm going to just spend that money on my own t-shirts, no matter what type of business you do, whether it's construction or, you know, whatever, right? You always want to have your branded t-shirts on there, put a QR code on there, you know, especially if you want someone to like visit your website. You can put a QR code so people can scan it. And a lot of people will scan QR codes because they're just nosy and they just want to know what it is, right? So you can get real creative and, you know, just get more people to get to know you and get to do business with you. Now that we have everyone here, I think, you know, a lot of people last night we weren't able to come off of mute. So that sucks. And I wish that didn't happen. But if you have some wins from this prior week that you wanted to share, please come off mute and share those things with us. I don't see a few people that I wanted to hear their story because I know that they had some good news. Like Jay, we had like 6 or more collections come off his credit. And mind you, we've been working at it for a while, so it wasn't like this happened overnight, but it was a great step in the right direction. So please come off mute if you've had anything, whether it's small or big, or whether you've taken action on some things, share it with the group, give us some motivation, because we all know, you know, in this space of entrepreneurship, it can be, you know, stressful, the unknown, it can be stressful. I talk to people who are entrepreneurs all the time, and a lot of them are lonely. You know, I had a conversation with one of my clients today, and he's like, I can't tell you how lonely it is in the entrepreneurship space. And I was like, yeah, no, I get it, because sometimes you feel like no one can understand how stressful things can be, because he was saying, you know, he just got a new contract and this was such a blessing for him, because sometimes you don't know where your next, you know, paycheck is going to come from. So please share your wins.
Can you hear me, Nicole?
I can. Who am I speaking with?
Stacy, how are you?
Hey, Stacy, I'm doing well. How are you? Long time since I've heard from you, so I'm glad you're back.
Thank you. Thank you for the opportunity to come back too,
Yeah,
because
yeah,
I'm
absolutely.
going through some stuff with credit acceptance. So,
And that's the auto loan place, right?
yeah, yeah.
Okay.
I don't have any wins, but I guess it is when me starting off with trying to fix my credit on my
Yeah,
own.
absolutely.
So
Because, you know, tell everyone a little bit about your backstory so they can understand kind of, what your experience has been so far.
so I've had probably like two or three credit repair companies try to help me. Um the last one, I don't want to name drop or whatever. We management, well, I'm a name drop the company, but we management, I paid for credit repair. I was waiting on the credit repair. Um, I didn't see
And how
any,
much did you pay for that credit repair?
almost 1,000.
Okay. And that was the third company that you had paid for credit repair.
I've
Yeah.
I've paid like through the time over time. I didn't pay like probably more than that, but um, yeah, I paid almost $1,000. I didn't see any results, and I got tired of that. And I'm like, I made phone calls to the credit bureaus and everything else, and I emailed them back and forth, and they gave me my refund, and that was cool and everything. But it's like it kind of discouraged me too because that was like I didn't feel like dealing with it at the time because at the time I couldn't deal with it. But now it's like, hey, I'm going through the situation. I don't want to keep paying people to do this.
Mm,
And now it's kind of like in the industry now, it's like it's a good industry and whatever, but a lot of people getting flagged for different stuff. And I'm like, I want to learn how to do it on my own, so I don't have to
yeah.
pay nobody else to do it ever again. And if I have a problem with it, I can just do it on my own or help my friends and stuff like that.
Absolutely. Absolutely. And that's a huge win because sometimes you feel overwhelmed in life. And then, like, that's how I was. I was overwhelmed with life. And I was just got to that point where I was sick and tired of paying for credit repair and nothing was happening. And, at the end of the day, a lot of these companies, what they do is just either they do shady stuff, like, stuff that you never authorized, right? Because a lot of these companies that advertise online that say that they can do the credit sweeps, it's usually something illegal, right? Let's just be honest. Usually a credit sweep, and there's different ways. It's like a credit sweep is essentially where you dispute everything on your credit report with the credit bureaus and the creditors, right? So you're basically trying to sweep everything off of your credit, right? But what a lot of the people who do credit repair and, like, for example, I had a client and he said that he was using some of the people on YouTube, and I think Crown Credit Pros was one of them, right? All they do is identity theft sweeps. So they will claim identity theft on everything. Um, Mr. Claude, he was saying the same thing. He was saying the prior credit repair company that he was working with, they had him go down to the police station and they wanted him to file a police report on all the stuff that was negative on his credit report. He didn't do it, but that's the type of things that they are doing, along with things that are also questionable, like the trafficking sweeps. Those are popular. I don't really care too much. Like the data breach, that's cool. We can all do that and get away with it still, right? But the trafficking is questionable, in my opinion. I would be careful with that. And then of course, like if you are claiming identity theft or trafficking, that is going to be on your record, right? So there you can still get the same type of results by saying less. It might take a little bit longer, but it's well worth it, because when you start claiming all those other things, your credit report's going to start lighting up with all of these different alerts and fraud alerts and all this stuff. And it could still happen whether you're, not saying identity theft, because that happened to me recently, where we'll say the data is fraudulent data, right? We're not saying identity theft. We're not saying, you know, all these other trigger words, but since fraudulent is a trigger word and there's so many codes that they can use, a lot of times they don't know how to code it. So it might just set off fraud alerts on someone's credit report. but you can still say, hey, look, I was a victim of a data breach. There's been so many different data breaches out there, including the Equifax one. And there's a sample of like the Equifax data breach in here. Stuff like that is way more safe to do than the others. Now, an FTC report is different, right? It's not a police report. So you're not filing a false police report. And in fact, the FTC was put into place so the credit bureaus could have this proof that they needed. A lot of you may recall calling the credit bureaus and them saying, hey, we need an FTC report, right? Has that ever happened to anybody? Where they call the credit bureaus and they're asking for an FTC report?
Not, I never done it like that. I'm new to the, see, the thing is with me, I'm new to the new credit way of doing disputes now because it's changed in
Mhm.
the last like 6, 7 years. So
Yeah, it
it's
used
not
to
like
be
what it used
way
to be.
easier. Like, it used to be super easy to, do a sweep. Back in the day, you could get an affidavit notarized and pretty much get everything off your credit profile. Now, affidavits still work, but things just take a lot longer. So it's like you have to kind of do a variety of things. And sometimes, even for myself, I feel like I'm throwing shit against the wall and seeing what sticks because some days this will work, some days that will work, right? So now what we do is a variety of things. We upload to the credit bureaus, Experian upload, TransUnion sometimes will work, sometimes it doesn't. Equifax, sometimes you can upload, but even I have issues with Equifax. Like they told me the other day when I was talking to them, because I had a business gas card that went south a couple years ago that just recently hit my Equifax and they are being bitches about taking it off. Okay, guys, it's like even I have to deal with this shit. So they told me go online and just upload all your proof documents. Well, when I go to equifax.com, the collection isn't even listed on my profile. So it's super frustrating dealing with these guys. And then I call them and tell them there's an internal block. So not everything's showing on my credit report. And one guy could see it, the other guy couldn't. So you really have to get in a manager on the phone. And even I'm still dealing with this stuff, right? So it's very frustrating to deal with, but you have to treat it as if it were a part of your job. Like if this was your job duty to make sure that you call these people every day until the issue is resolved, you would eventually get it done because you have to do it. That's what you're paid to do, right? We have to have that same mindset when it comes to credit, disputing via letters, right? And I always recommend if you're doing it for yourself, you can send it snail mail with just a stamp. That's no problem because it's still going to be postmarked from your zip code, right? But even I will get these damn notifications saying, we don't think that what you sent us was from you, even though it's got a stamp and it's handwritten. It's just ridiculous, right? So what I recommend is certified mail return receipt. You always send them a copy of everything and you start building your case against them. I showed you guys my binder before. It was like this thick because I kept a copy of everything. I kept all my return receipts, my green cards, the ones that came back in the mail, so I can ensure that they received it because I'm going 3 rounds with these guys now. And then I'm going through arbitration with them because they sometimes are impossible to deal with. So sometimes you have to get, start going through like a litigation process. The reason why I like the arbitration way is because the filing fees are a lot less expensive. I want to say they're like $295 through the AAA. And then you can actually ask for reimbursement versus like if I were to go like file a claim in small claims in the county court, um, it's going to be probably close to like $500 for the filing fee. And that's a lot. So I would much rather go through arbitration where I can do pretty much everything online and a lot of times they're going to want to settle it before you even get to the arbitration date. And that's fine, because you could probably still get them to delete the trade line and, you know, reimburse you for a violation. And it's like $1,000 per violation. And then you might claim a little bit of damages on that too. So you could still get, you know, a couple $1,000 check from them. But you just have to be aggressive. So between the mailing, online uploads, and calling in, that should, you know, that should do it. And like Claude said, there were some days where he had to call every day and continue to follow up, and he would always document who he spoke with. And you have to document everything: the time that you called them, the date that you called them, who did you speak with, was it a manager, you know, document all these things, because essentially what you have to do is build a case against these guys. A lot of times their computer system is not like responding to you for some reason. And it could be very well that you've been flagged as credit repair in their system, because that's a real thing that happens, right? So if you've paid for credit repair in the past, and they suspected you to be using credit repair, what they do is they flag your profile for, you know, credit repair. And so now moving forward, you're going to have a really hard time them processing your disputes. You're probably going to see a lot of those automated responses saying, hey, we got something from you, but we don't think it was from you. So that's when you really have to call in and say, hey, this is me. Or what I do is I handwrite a cover letter to them. I always do a cover letter. And Equifax was the one that actually gave me this information years ago, back when they had faxes, which they don't have fax anymore. Fax stopped a couple years ago, and Equifax was the last one that accepted faxes. But, you know, uploads just as good now. But always put a cover letter in there. And if you handwrite the cover letter, the 𝒂𝒄𝒅 system is not going to be able to transcribe that, because what happens is when you send these letters in, especially when you're using like templates that are on the internet that everyone else has used, they transcribe it, and then their 𝒂𝒄𝒅 system will read it and try to respond to it. And again, there's only so many codes in there. And a lot of times if they think that it's just a credit repair letter from like Credit Repair Cloud, because they've got those letters like flagged, they'll just, you know, do an auto response saying, hey, we don't think this is from you. So you got to really get aggressive with them. And what I would do at that point is do an affidavit to them, like a truth affidavit saying, hey, this is me. I am disputing these accounts with you. And then do a handwritten cover letter with your affidavit, your truth affidavit, get that thing notarized at like the UPS store for like $15. I have quite a few affidavits in here as well. I know we're searching for like the Equifax data breach, but let me see if I can find that first. Data breach. But a lot of people have used the data breach method, and it has worked pretty well for them. So here is, if you type in the search Equifax data breach, you'll find the truth affidavit inside of there. But there's a ton of these affidavits that you can do in here. There's the identity theft affidavit. I wouldn't necessarily do that unless, you know, you've been a victim of identity theft, because you can do the affidavit of truth, which, you know, is just as good, and then get that thing notarized in here. But that's a good way. And if you have been a victim of the Equifax, if you even have the data breach with them, if you even have a screenshot, you can use that as proof, right? Because they are always looking for proof. Like, what proof do you have that you were, you know, a victim, right? And a lot of times they don't do anything because they don't have the proof. So that's why it's so important to make sure that you literally treat this like a court case and send them as much proof as possible. And that way they don't have anything that they could possibly say to you, right? This is what they want. They want your ID, a valid driver's license, okay? They want a social security card, And they probably are going to want a proof of address, right? It's best to send them like a utility bill. You can just send the top half, but it needs to have the date, the logo, your address, their address, and most importantly, it needs to be dated like within the last 30 to 45 days, right? You can do a bank statement, mortgage statement, any of these forms. This is directly from their website, right? So as long as you send them everything that they need, it's no reason why they should not be able to process your request. And again, you can upload on the 𝑪𝒓𝒆𝒅𝒊𝒕, but sometimes it might not work, right? So you have to just be able to understand how to attack it on all angles when it comes to these credit bureaus. And that's mail, certified mail return receipt, upload, and phone calls. All right. Those are the three ways that we're going to be attacking things. I know I had this Equifax data breach. Maybe it's just under data breach. There's so much stuff in here. Sometimes I'm like, did I put that in there? Okay, this is it right here. This is from January 3rd at the beginning of the year. If you just type in data breach, this is basically proof, right? So this is just a screenshot and anyone can pretty much use this because this is what it looks like. And it just says, thank you, based on the information provided, your records indicate your personal information was impacted by this incident. So this is proof that you were affected by the data breach, right? The Equifax data breach. But if you have any other proof from any of the other hundreds of companies that have data breaches, you can use that as well and say, hey, I was part of data breach. I don't know this company. I don't have any relationship with this company. And I need you to block it from my credit report. And this is kind of an outline for that here. So there's just, ton of information. Try to go through it if you can. A lot of the things that I talk about are in the credit repair secrets. So if you are inside of the classroom section, it's actually the first classroom, and this is the credit repair secrets. A lot of the trafficking, the FTC reports, the Equifax data breach method, all that stuff is in here. All right, calling into the credit bureau. So go through here. There's like 27 videos in here, and the guide is in there as well. And another good video is, let's see, the CFPB is I feel like now it still is helpful. Don't get me wrong. You can still file complaints, but I don't know how powerful they are now. I feel like it's much less of a success rate, but you can still use them as a backup method. And you can use the Better Business Bureau and the Attorney General and make complaints with them. But there was, which one was it? The Experian backdoor method. That's great for personal information. But here's the arbitration. This one used to scare me because I didn't understand it. And every time someone would talk about it, it was just like, oh my gosh, like, how do I do all of this? But it's actually pretty easy, especially now that you've got ChatGPT, because basically the simple, I guess you could say overview of it would be, file at the American Arbitration Association. And essentially, these are all of the things that you're going to need, right? And I have like the outline here. You just have to take the time to kind of read through it because each credit bureau would be a little bit different, right? Same concept, but they have, different ways that you submit it and all that good stuff, right? But basically down here, I have like the 5 steps, and there is a template letter that I have that kind of is like the pre-arbitration letter to the credit bureau saying, hey, I am about to file for arbitration if you don't take this shit off of my credit report. So go through here. This is the case law right here. So a lot of this stuff is already in there. It's super long, but go through it because it's the exact blueprint on how you can take the credit bureaus and, take them through the arbitration process, get a little bit of money for violations. Or if you are just like, hey, I want to just talk to a law office because I want to let them handle it. I want to let the professionals handle it. What they're requiring is a copy of your current credit report, the violations that you currently have, right? And a summary of what you have already done. Now, once they take a look at your credit report and see if you actually have a case, they may ask you for the proof of what you have already submitted to the credit bureaus. And you need to keep track of all that stuff. Again, when we're doing this, we are building a case against them. So if there is, the point where we have to take them to arbitration or litigation, we have a copy of all this stuff. And I put inside of school the company that I'm actually working with, which is 𝒓𝒂𝒊𝒕 𝑍𝒊𝒏𝒆𝒔. And I put the link in here for you guys to submit your information in the event that you wanted to have them review your credit report. Let me see where that is.
I
This
have
one
a quick
has,
question.
sure. Mm-hmm.
I'm finding out that with this finance company that I looked into my contract and it said if we go to arbitration, they basically technically pay for it. And or I'll ask ChatGPT, if you're low income, you can demand them to pay for your arbitration fees, I heard. But I don't
Yes,
know if
you
that
can
works.
also file. I think you have to fill out like a paper to have it waived.
Okay.
But yeah, there's usually like that's the same kind of outline for like the um small claims court. If you are low income, you can apply to pay reduced filing fees or have the filing fees waived. So you just have to ask them about that. But you should definitely have them reimburse you for all of the fees. So that's why it's really important to figure out exactly what it costs you to go through arbitration. I'm talking about if you have to pay for miles, if you have to pay for copies, if you have to pay for a freaking a freaking notary, that's $15, the miles to the UPS store. Document all of that stuff. Okay. This is all of the expenses that it cost me because I believe miles now are like close to, I don't know how many cents they are. But look it up in your state and you can get reimbursed for mileage in some cases because this is all stuff that you had to do and you had to pay for because these fuckers wouldn't do their job. And are you talking about the company that you just bought your vehicle from or credit acceptance?
That's the company credit acceptance. Yeah.
So is credit acceptance the lot that you bought it from or they the finance company?
They're the finance company. They finance a lot of like
Yeah,
subprime.
I've seen though their name a lot in the past. So this was just like a small mom and pop dealership then.
Exactly. Yeah.
Got it. Okay, yeah. Oh man, credit acceptance is the worst. I feel like I have always seen them in a bad light, and I'm sure the interest rate is super high. And now that the vehicle's broke down, correct?
Yeah, it needs a new engine. I only had it for
Have
eight
you
months.
researched the lemon law in your state? Because that sounds like a lemon.
So when I was researching with ChatGPT, they were saying that it's as is, and I didn't have a warranty on it, but at the same time, the engine shouldn't have went out. And then I found out that I have altimeter fraud, which is the numbers that were on the dashboard were not on the contract, and then there's a gap. The way he placed the gap and the finance charge was wrong, and then he lied about my down payment amount. So that
Oh,
alone can recession. I can have a recession of the whole loan, but I don't know how
yeah.
they're gonna try to play me. So
You know what I would do
rescission,
is
I meant to
I
say.
I would contact McCarthy in law because they are FCRA and FDCPA and they are free to talk to, so why
Mhm.
not let them take a peek at your case?
I spoke to them. They say they really work with like the credit bureau stuff,
Okay, more of like the
not so
credit
much as the
bureaus.
consumer law and automobile stuff. But
Okay.
I filed a complaint with the CFPB the other day, and then I randomly called credit acceptance, and it automatically went to the legal team. So the account is frozen. I sent them a letter like, hey, I want you to freeze the account so this a legal matter.
Yeah.
And one of the lawyers, no, I'm not gonna say she a lawyer, she an analyst, and she called me, asked me about some pictures, and oh, you didn't see the car was this and that. I'm like, no, and she said she'll give me a call back, and I got her email. So, for what I researched, they're gonna put me through this process, and then they're gonna respond back to the CFPB and
Okay. Well,
go
you've
back
got
and
some
forth.
things cooking. Don't give up. Keep on cooking. Make a complaint against the Better Business Bureau as well. And I would
Mhm.
also see what you can do with the Attorney General's office, because that has to do with the state. And it sounds like they're doing some bad business at this car dealership lot that you're talking about, because there is no way in hell, if you buy a brand new vehicle from a used lot, that the engine should blow, or have any sort of issue like that, and not be covered by them. I feel like that's
And
just
I've heard
filthy.
like this lot, like when I went to the one of their cousins' lot to go get my car looked at, like it was other people there, like, hey, these people did this to my car. Even the mechanic even told me they did some like fraudulent stuff. But their family or they're in affiliation. So I don't know. And credit acceptance no better too. Like a lot of people go to these C lots, D lots, and the engine go out, and people just like okay, and then credit acceptance is suing them. I'm just not trying to go through that.
Right. You're like, hey, just take it off my credit, take this, car back, cancel the whole contract, because at this point, that there is no contract, because they didn't sell you a working vehicle, and they knew better. I feel like they knew better. So continue on that journey. It can take a while to go through things like that. But if you have no interest in keeping the vehicle, I would take it right back to their lot and drop it off to them and say, look, um, the contract is canceled. The contract is null and void, and I am pursuing legal action against you. You can have this car back because it does not work.
Yeah, that's what I told them too in the letter. Like, hey, I don't want the car because I was doing research and I hear they try to give you the car, but if you gave me the car, I still had to do a 1099-C and put an engine in it.
Yeah,
So it's like,
no,
no.
I would take that car right on back to the lot and park it in their lot and go drop off the keys to them and say, here is this vehicle back. The contract is void, and I'll see you in court, because I will not be responsible for a vehicle that does not operate.
Yeah, I don't know. Like, yeah, I won't wait till they call me and see it's parked. So I'm gonna see what they say or whatever.
Yeah.
But
Well,
and
good
I
luck
did.
with that. Hopefully, it all works out for you. I think the best thing that you could possibly do at this point is just try to get that damn contract canceled, because when you have issues like that with vehicles, even if they fix it, it's like, what's next,
Yeah, I don't even feel comfortable in the vehicle. They can't
Right.
even give it to me. Like, I don't even
Right.
want it.
Yeah, for sure. It might be just best to part ways. Well, I'm glad you're back, Stacy. In the meantime, start working on building up some positive credit, so that way you don't have to deal with these C lots and D lots. We can go to the credit union. And the great thing about the credit unions is, hey, when I first got refinanced with Navy Fed, my credit was maybe a 660, 670. It wasn't that high of a credit score. And honestly, I hadn't even been with Navy Federal that long. And the great thing about, getting financed through the credit unions are, they're going to cut you a check, right? And say they cut you a check for 30, 40,000, right? As long as your vehicle plus the taxes, and you always want to make sure that you get gap insurance. I'm not a huge fan of buying the extended warranty, because of the fact that generally it doesn't cover anything. best time to buy a new vehicle that does include all of those bells and whistles and warranties is at the end of the year when they're trying to, clear out their lot because, end of the year is the best time to buy a vehicle. They're trying to get the old ones out and get the new ones in. And a lot of times, some of these dealerships, they'll have really good warranties on brand new cars. I'm not a huge fan of brand new vehicles unless they come with all of these bells and whistles that are going to protect you, and you'll be good for like the next 5-10 years, right? The pre-owned vehicles, you can go about 4 years back and have a pretty good interest rate, right? So you'll have to go to a dealership that is partnered with your credit union. Not all dealerships are going to accept outside financing, right? So your credit union or bank will provide you with a list of the dealerships that they're partnered with. And what I like to do is just call the dealership first before I even waste my time and go down there, because these places are sales places. And I made the mistake of calling a dealership and asked them if they accepted Navy federal financing. And they're like, yeah, absolutely. And I get down there and they're like, oh no, we don't accept Navy federal financing. And it was like an hour and a half away. It was like, oh, are you serious? So their job is to get you to come through the door. And then they were trying to sell me on, financing with them. They were like chasing me to the parking lot. It was crazy. I was like, go away. Like, oh, it was a bad experience. So that's why I try to do everything over the phone with them as possible, because, you just want to make sure that you're not wasting any time whatsoever. But you won't have to put anything out of pocket. That's the beauty of it, right? Every time that I have ever bought a car, I have always had to put a down payment down, right? Until I finally learned the hack with getting a check from the credit unions, or, if you have a good bank, like, you know, there's so many of them out there, but Chase, for example, right? If you get a check from a bank or a credit union, you're not going to have to put anything out of pocket as long as they cover 100%. The only time that I ever saw a bank that did not cover 100% financing was Bank of America on the business side. So sometimes you'll see on the business side that they will only cover maybe like 97% of the loan. So you're going to have to come out of pocket like 3%. That's pretty common with them. Sometimes it'll be 100%, but it's very rarely do I see that they finance 100%. So even if you get approved for like 60,000, you're still going to have to come out of pocket 3% of that, which, hey, that's still pretty good, because I had somebody recently, he was trying to get a very high valued auto, right? And he didn't have any comparable credit on his credit profile. So he had nothing that was comparable on the personal side and nothing that was comparable on the business side. He had bought a trade line from me, like an authorized user trade line, and that posted, and that brought his score up. So then he was like, yeah, I'm going to go try to get this like $100,000 car. And I was like telling him like, hey, I don't think they're going to approve you. They wanted like half down. When he told me that, I was like, what? Like, that's crazy, So nothing is usually, what it seems to be. So you always want to make sure that you spend the time, spend the money to build out your credit profile, so that way you can qualify for these things. Because I tried to tell him like, that's not going to happen. In order for you to get $100,000 vehicle, you have to have shown that you can manage like a $50,000 or a $60,000 vehicle. And that's why people buy the primary trade lines, which I just talked to my partner who does the primary trade lines. The Experian ones are still pending, but we have more Equifax ones, and we can do some deals on those. We have like a home improvement one that goes up to 40K, and it's like $1,500. But the good thing is that it's comparable credit, and that can help you get a home improvement loan. And NASA has home improvement loans for up to 100K, Navy 50K. And these ones are up to 40K. So this can help you qualify. They have up to 4 years of history. And I'll put all the details inside of the school community, but that's why people buy these primary, loans. And even sometimes when you spend the money to buy a primary auto loan, the banks may not accept it because it's not a well-known bank, right? Some of these trade lines, they're not known banks. So they don't hold as much weight as if it were to say like Bank of America or something like that, right? So that's why it's so important to kind of, do things the old school way and try to do as much as you can organically, and then just use trade lines to kind of enhance everything, right? So key points in understanding comparable credit and building a strong profile. It's so important because there's no way that you're going to get $100,000 auto or, $100,000 home improvement loan if you haven't shown that you've been able to manage that type of credit trade line prior, even if it was only half of the amount, right? But that's what the banks look for. They look for other well-known banks that have provided you with some sort of similar credit so they can be like, yeah, sure, cool. They can be trusted. We'll give them that too, right? Many people building credit, they start with just making on-time payments, which can be something as simple as a student loan, right? Or even a student credit card. And that's why it's so important to understand the value of student loans. I have so many people that have come to me and they've had issues with student loans. They've had people that have had late payments with student loans, right? And I tell them, like, we have to be careful with student loans because they're not the best to remove from your credit, right? And even if you do get something removed from your credit, whether it's student loans, child support, a collection, a medical bill, whatever, it does not mean that you don't owe that money, right? It just means that that's not on your credit report. But let's be reminded that most student loans are federally funded, meaning that's the government's money, and they're going to get their money one way or another. They will not be ignored because guess what? If you ignore these student loans, they will take all of your tax money, your tax refunds, and eventually they will come and they will garnish your paycheck. All right. So you don't want that type of problem. You want to stay in good standing with him. You want to pay the minimum, just stay in good standing and try to get on an income-based repayment plan, because a lot of times the student loans is really what's carrying someone who doesn't have much history because of the history with those student loans. They've been opened for a long time. Okay. If someone did have a late payment on there, it's likely that they are probably going to want to help resolve that, especially if it was something that was overlooked or an error, right? I had someone recently say that they were in forbearance and a late payment reported. And with the student loans, they don't report late until you're 90 days late, right? So when I was first learning about credit, I had a mentor that told me like, hey, the way that you can get around that is saying, hey, this never reported 30 days late. It never reported 60 days late. So how can I be 90 days late? You know, but then after speaking to the finance company, which is usually like, NailNet or one of these companies that services the loan, they told me, we don't report a 30-day late. We don't report a 60-day late. We try to resolve it, for as long as we possibly can before we report a late payment. So that's why we don't report 30 or 60. We only report once the account has been 90 days late, right? So you just have to be, again, responsible with everything. Make sure you're communicating with them, get on into an income-based repayment plan with them, pay a small payment until, maybe some forgiveness will become available to you at some point, then you can apply. If you don't stay in good standing, a lot of times you can't apply for the forgiveness. So it's important to manage those accounts properly and not get a late payment because they are going to be the longest standing account on one's credit report. And usually if there is some sort of late payment, if you just contact the service provider, which is the loan company, they will usually correct it, but it can't be from a third party. It has to be from you, from the person who the account belongs to. I've tried to send out letters for clients and they don't like it. They'll send them a letter saying, hey, we got a letter. We don't think it was from you, though. So calling into them, messaging them through your portal, but making sure that they understand, hey, this was an accident, or this was an error, or whatever the case may be. Can you please update this to paid as agreed? Because I had a client just recently, and all of a sudden, all of his student loans reported late with Equifax. And I was like, wow, this is crazy, right? So we sent in the disputes. I had him call in. And then, like 2 months later, after we did all of this, everything was corrected. All like last month, I repulled his credit and everything was back to normal. His credit score went up like 100 points from that. And it was just like, oh my God, what a freaking blessing. And I don't think that it was anything that I did per se with the dispute letters. I think it was from him calling in to the service provider and them correcting it, because they can correct it so easily from their end. All right. So just, knowing that is super powerful for you to help other people, because so many people have, student loans. And, if you have children that are going to be going to college, student loans aren't a bad thing. They're a good thing. As long as you manage them properly, they can really help you, along with, student credit cards, and making sure that our children understand the importance of just paying as agreed. That is the most important thing. Even when I had horrible credit, I had several auto loans on my credit report that were paid on time. So while I got one of my auto loans, and I think my credit score was like a 560 at that time, I got approved because I had so much comparable credit that was all paid on time. So that really helped me get approved for the vehicle when I had horrible credit. Right. So to qualify for a credit card or a loan, the first place you often need, some sort of credit history. So if you have student loans or a student credit card that was paid on time, that's going to help get you to the next level, right? They're going to see that you were able to manage those accounts. And again, student loans are installment accounts. So they are comparable credit to something else like personal loan, sometimes, small auto loan, but they are definitely going to, help if they're managed properly. Now, do you need credit to build, you need credit to build credit, right? So it's kind of sucks because you get stuck in this like, well, how am I going to get credit if I don't have any comparable credit? And that's kind of where we talked about last night, is creating your own trade lines, right? Your own credit accounts. And a lot of times you have to secure those accounts when you're first starting out. So like a secured loan or a secured credit card. I don't like secured credit cards for many reasons. One is because it's kind of like a hostage situation. You don't get your money back for a long time, right? Especially with like Navy Federal. I don't know why, but it seems like their secured card has not been graduating for a lot of people lately. So I always tell people, skip the secured card with them. Don't waste a credit card on that darn secured credit card. Go get a secured card from another well-known bank like US Bank, or Bank of America, or let's see, PNC. They have a secured credit card as well. You just have to go into a branch and apply for it. You also have to do that with like Bank of America as well. It's best to go and apply for it in the branch. With US Bank, I believe you can just apply for it online, and US Bank does graduate at some point. Bank of America, I rarely see it graduate. So it's okay to start with like $500, $1,000. Usually the cap is 5,000, but that money is going to be held hostage as long as the card is secured. So that's why I like Discover It, is because after 7 months, I pretty much know that most of their cards are going to graduate, and you're going to get your deposit back in the form of a check. So, I don't know if that's going to change because they just merged with Capital One. I hope not, because that was one of their like many features that was really good about them was the Discover It secured credit card. They also have like student cards as well. But I really like the Discover It card because it graduates so quickly. And they kind of give you a time frame too. Like, Navy Federal, they say it can graduate within a year, but it's like I'm talking to people, and this has been going on for a while, where they've had their secured card for many years and it has not graduated. So it's like, we're not going to waste a card with Navy. Do the secured loan with the Navy instead of the secured credit card. That way you still have access to your funds and you're still building a good relationship with them. And then when your credit gets, somewhere closer to that 700 range, where you don't have, as many derogatories or negative things affecting you on TransUnion, then go through the pre-approval process with Navy and make sure you apply late at night. It's always better to apply late at night. And I also recommend, before you apply for credit cards, if you have everything cleaned up, add at least 1 or 2 higher limit authorized user credit cards. This is what they are used best for, is credit card funding, especially on the personal side. But even I have like people that work in the funding space that come and get their trade lines from me, and they'll bring me clients that don't have like a high limit. So sometimes I'll have people even from funding companies that say, hey, I need like a high limit trade line because this person's highest credit limit's like 3,000. So it does work on the business side as well. But, why wait till you get to the business side, right? We want to perfect everything on the personal side first and heavily invest in ourselves on the personal credit. So that way we can qualify for more credit on the business side. So if you add, like, this is exactly what one of my clients did, is just build a relationship with Navy, right? Do the secured loan. She did a higher limit secured loan of 20K. Do you need that much? No. But if you can do 3,500, that's kind of like the sweet spot I've found, right? We did that, waited a little bit, added 2 authorized user trade lines that were between 20 and 25K. Then she went and applied for the Navy Federal Cash Rewards card and got, I think it was 20 or 25,000. And that's what she wanted because she could not get high limits and she needed them. Then piggybacked off that, went to Chase. They gave her 30,000 on the business side, 18,000 on the personal side. So you see how Navy Fed opened up those doors to get higher limits, because if Navy Fed were to only have given her 7,000, then I would have expected Chase to give her 6, but Chase is going to kind of follow suit. And a lot of these other banks are going to kind of follow suit, right? So that's the goal. That's the plan, right? Get maybe 1 secured credit card and do the rest secured loans. That way you still have access to your funds, but you also want to verify, if you're not using Navy Federal for the secured loan, verify you'll have access to your funds. Every bank is a little bit different, right? We talked about the rent. That's about the only utility bill that I would add to build credit. All the rest of that stuff, get off your credit report. If you've added Experian Boost, get rid of it. It's not worth nothing. Okay. Nobody's going to approve you because they see that you paid your Verizon bill on time. It just doesn't work like that, right? Especially when you have added utility bills and the payment history is spotty. Okay. So we want to just get rid of that. It just clogs stuff up. We're focusing on quality. We don't want things that are going to clog things up. We're focused on real bank trade lines that are going to get us real funding, especially on the business side, right? Those type of utility bills, do you honestly think that the bank's going to look at that shit and be like, hey, yeah, we'll give you 100,000 because we saw that you paid your Netflix bill on time for 12 months? No, it's not going to happen. All right. Authorized user accounts are great. We kind of talked about when to leverage those right before you're getting ready to do a credit card stacking. If you're going to be applying for credit cards, I recommend a little bit of stacking, right? Because you're going to take a little bit of a hit when you open up new accounts, right? So if you're going to take a hit, you might as well apply for a few different cards, especially if you've invested in some authorized user trade lines. So you want to find about 3 banks that use Experian, about 3 banks that use TransUnion, and about 3 banks that use Equifax. So that's why it's really important when you are selecting. When we're first starting out, we're going to select about 3 credit unions that we're going to start building a relationship with, right? If 3 is too much for you, just do 2 or just do 1, right? But select ones that pull from different credit bureaus, right? For example, Navy Fed, we know on the personal side, they're going to use TransUnion, right? For Golden One, if anyone wants to go with Golden One, they're Experian, right? Others, like for example, PenFed, right? They are a combo. They're going to be Experian for loans and lines of credit, and they're going to be Equifax for credit cards. So if you're just doing credit cards, we can put them down under Equifax, right? So build strategically, and then you can also throw in a couple credit cards that don't require a relationship in order to apply, like, Apple, Goldman Sachs, TransUnion, Citibank cards, Equifax. If you are going to be applying for Chase, be careful, because if you're at that point where you have some comparable credit and you've added some high limit AUs and you think Chase would approve you because you have at least a 720 credit score, you can expect them to pull from Experian and TransUnion. Okay. They used to primarily just be Experian, but now I've seen a lot more where they're pulling from both, and it's best to apply for them first, right? So usually I tell people they're probably going to be like on your second part of funding, because your first part of funding when you're first starting out or like building up credit, right? Essentially the same thing. You're applying for credit, right? So your first round is really going to be, strategically done to just add some high limit trade lines to your credit. And if you are going to get Chase, I would not get more than 3 credit cards during this first round, because they have that 524 rule, where if you've opened up more than 5 credit accounts in the last 24 months, you're probably not going to qualify for a credit product with them. Okay. So if you get 3 solid cards your first go around, awesome. Manicure those for the next 6 to 12 months, and then Chase can be on your next funding sequence, and you can knock them out of the park first. And you're going to go into your local branch, you're going to sit down with a relationship manager or schedule a time to do so, and you're going to apply for some personal credit cards. You can apply for 2 personal credit cards if you'd like, or you can apply for a personal card and a business card if you'd like, right? I had a client, he has a business, he's invested heavily into personal trade lines and business trade lines, and he got 2 personal cards and 2 business cards. And for the combined limit, it was $90,000. And he did not use any rep except for his local rep, because I told him there's no like special rep out there that can just make it happen. Like, you build it, it will come. If you build it, the funding will come, right? It takes time though, right? Because not, and you don't want to take on more funding than you can really, manage. That's the tricky part too. A lot of people take on too much and then they find themselves into a little bit of debt, right? So we also want to take it slow on purpose, because if you get too much, we're all able to spend it, especially when we're first starting out. Because man, I tell you, when I first got my first 20,000 or whatever, I think it was 20,000 that Navy gave me. That was my first high limit card, right? Oh man, I felt like it was burning a hole in my pocket. I just couldn't wait to swipe it, right? And some people get a little too swipe happy, and I've had people where they've gotten these 20 and $25,000 cards, and next thing I know, a year or 2 later, they're calling me saying that they messed up. And I'm like, look, there's nothing I can do to help you. You got to pay that back. We have to be able to have self-control no matter what happens in our life. We don't want to sabotage our credit because of it, because I told him, like, you could have, done so much with that. You could have added your daughter as an authorized user and had her set up if you would have managed that card properly. But, sometimes life happens. I get it, but we have to make better decisions that are going to affect us long term, that are going to be better for us long term, right? We don't want to just sabotage everything because we're going through something right now, right? You're basically setting yourself up for a long recovery process if you do that. When, sometimes utilization can be a little bit higher, but as long as you maintain the on time payments for the minimum amount, you're good. And that can always change. So let's talk about credit utilization versus debt to income ratio. All right. Credit utilization, that's going to be our credit cards and our lines of credit. Last night, I talked about a big mistake that one of my clients made because there was a misunderstanding with him and the bank. Okay. What happened was he thought he got a home equity loan. Okay. What happened was he got a home equity line of credit, and a line of credit is going to affect your utilization. All right. So he took out the whole line of credit and his utilization went down, down, down. All right. And, if that were a loan, it would have had no effect essentially on his it would have no effect on his utilization period, and it would have had very little effect on his credit profile. He may have lost a little bit because of a new open account and it reduced his history a bit, right? But nowhere near the effect that it did with the utilization. So when you get loans, you can hold debt a lot easier with loans versus a credit card. So that's why a lot of people, when they get themselves into a little bit of credit card debt, which is why I tell everyone to go slow, because, we can't just, trash these credit cards. We have to treat them like they are a luxury. Okay. We have to treat them like, hey, this is my ticket to a better life long term. I have to manage these properly. They are for decoration on my personal credit reports so I can get, whatever funding I want in the future, essentially. Right. Now, with debt to income, this is really important for people that are going to be purchasing a home, right? Debt to income actually has no place on your credit score rating. There is no place when it comes to your credit score that includes your debt to income. All right. But utilization, that's 30% of our credit score, right? So it's a big, big deal in making sure that you understand exactly what type of funding that you are getting. Because, had my client knew that he was getting a, credit line, that could have been, a different conversation. Like, hey, I don't want a line of credit. I want a loan. So now, you got to go back to the bank and see if they can redo things. And it always makes it so much trickier when you have already got the money. All right. So we got to understand what these things mean and what type of funding is going to be best for us, right? Loans are always what we want when we're taking out, something that we're going to pay over time, something like that, something for a high amount. Auto loans, personal loans, student loans, right? When credit cards get out of whack, we got to get a personal loan to pay them all down and take that as a learning lesson to slow down on the spending. And, if you're not able to spend, pay what you spend pretty quickly, you're going to have to reduce what you spend on the credit cards, just period, right? Just put them away for a bit and take a break, because I know sometimes it can be, a learning curve. And sometimes you have to kind of like put yourself on punishment a little bit and have that self-control. Like, I don't even carry most of my credit cards with me in my wallet. Like I said, I work 1 to 2 credit cards a month, and those are the credit cards that I use like a debit card, okay? And I'm usually paying on them weekly just to make sure that I'm not overspending and I'm not allowing my utilization to really go past 30%, even though I'm trying to like build up my, credit limit with them. I still don't want my utilization to go sky high. So be careful with that. Debt to income is essentially what income you're making versus how much debt you have coming out. What's coming in versus what's going out. And what is that percentage, right? We want that percentage generally to be less than 35% because of the fact that a lot of times, if you are applying for funding, they're going to calculate that from a funding aspect, right? It's not a part of your credit score, but it could be a part of the approval process. All right. And that's always why on a credit application, they ask you, what is your income, right? So we have to be careful. I don't want to say lie about what your income is, but sometimes if you tell them that your income is 60,000, and you're asking for a 50,000 or $100,000 loan, I mean, do you honestly think that the bank's going to give it to you? No, you don't even make that much. Why would we give you more than what you make, right? So you can use household income, right? So if you've got multiple people in the home that are working and your combined income as a household is like 165, 185,000, that's what we need to put down on that application, because multiple people are contributing to the bills in that house, right? When it comes to rent, same thing. Calculate that thing down. So it's like, okay, everyone's paying their equal share. So essentially, my rent that I would have to pay maybe only would be $800, right? Versus if we put down that our rent is $2,400, like that's going to affect our debt to income much greater because we have to put more money out. So the less money that we can show that we're putting out and the more money that we have coming in, the better it is to get approved for funding, because they know, hey, we're going to get paid back, because that's what they care about the most, is getting paid back, and most importantly, getting paid back on time. If you can't do that, you're not going to get to the next level, guys. I've been there myself, and I've let some accounts go south, and it always comes back to bite you in the butt. Just like I had experience right now with an old gas card that they just sent to collections. And the crazy part is that I did not provide a personal guarantee to the gas card. It was a gas card that was a EIN only gas card, and now it's on my personal credit. So it's even more frustrating. But you see, like, that doesn't matter, because they will find you and it can come back and bite you in the butt later. And now I have to deal with it. And it takes time and energy, and like nobody wants to deal with that, right? So we just got to get into the habit of, managing our accounts properly and making sure that we're not taking on too much. So credit utilization, we covered this. Want to just make sure we're all clear on this, because we cannot afford to have any mistakes, right? Credit cards, lines of credit. All right. Those are what's going to make up your utilization. So be careful when it comes to the home equity line of credit, right? Because you can get one, no doubt, right? You can get a high limit home equity line of credit, but what you pull against it or what you withdraw against it is going to affect your utilization. The great thing about lines of credit is you can, take money out. Like if I have a line of credit with, Truist, I can walk into Truist and I can withdraw money from that line of credit. Versus a credit card, it's a little bit different. So that's why it's nice to have a line of credit, but would it be better to have a loan in this situation, right? Because then the loan is not affecting our utilization. Car loans, mortgages, mortgages are very high valued. Student loans are usually high valued. So they don't necessarily affect our credit score or our utilization for that matter, right? As long as they're paid on time, we're good to go. Keeping your credit utilization below 10% is really important, because once you start keeping a high utilization, it's really hard to start bringing it down unless you kind of have like a full restart, which is what I call getting a personal loan, paying all the personal loan off with, or paying it all, to your credit cards, paying all your credit cards off. But before I pay all my credit cards off, I always want to take the personal loan and create what I call my own trade line with a secured loan, right? Even though the secured loan is still going to need to have payments paid back to it, if I get $10,000 from a personal loan, I'm going to take that same $10,000 and do a secured loan to create another trade line for myself, and then just use that same money to pay back both of the loans. So now instead of having one trade line, I've got two. The more that you can show, the better, right? And these don't need to be kept open for the entire time that you like selected. Like a lot of people get, 60 and 72-month loans. You can always pay it off early, but the goal is to have these loans open for at least 12 to 24 months, depending on, what everything looks like for you. The longer you can keep them open, the better, because you want to show your ability to pay on time over time, right? Because anyone can make payments on time for 6 months, but can you do 12 months? Can you do 24 months? The longer that you can show your ability to pay on time, the more qualified you are as a credit candidate to them. And in this day and age, you have to stand out from everyone else, right? Because banks are tightening up. Funding is becoming, more restricted by the day, it seems like, even though banks have to lend out money to make money, right? There's no doubt about that. But they're definitely making it harder for people. So don't make it harder for yourself, right? Make it easier for yourself by creating the funding profile that's going to get you approved. All right. Examples of credit utilization: say you've got a $5,000 Visa credit card, your balance is $1,000, your utilization would be 20%. That's a little high, right? Still under 30, but ideally we would want our utilization under 10%, right? We don't want a balance on every single credit card. We really only want a balance on 1 to 2 credit cards, especially if you are going after funding, okay? We want to use the all but one rule. Have all cards paid to 0 but 1. All right. It's okay to have one with a limit on, or I'm sorry, a balance on it. Now, have I seen people that have had balances on more cards get funded? Absolutely. Right. It's not something that's, you have to do, right? You'll probably still get approved, but in order for us to stand out from everyone else, we want to look like we don't need the money. We're a more qualified candidate, right? So we're going to show the bank, hey, I don't need the money. We don't want to look like we're a risk. When you have a balance on every single card, you look like a risk to the bank in their eyes, right? So we want to look as less risky as possible, right? Debt to income, I kind of already explained that to you. It's really important before buying a home. You want to make sure that you're not overextending yourself. You haven't opened up any new credit. I'm sure you guys have all heard this. If you've, looked into buying a home, like don't apply for anything, right? They really do mean that, because it makes it really hard for them. And usually if you open up new credit accounts, they have to include that in your debt to income. And the debt to income is what gets a lot of people denied for a home loan. So if you are planning to purchase a home and you also want to get an auto loan, you want to wait on the auto loan. All right. Do not buy or finance, I should say, do not finance a car before you buy your home. Because if you add that car and you finance your car with your personal credit, that car could potentially get you denied, because it affects your debt to income ratio, right? And I've dealt with a lot of people that had that situation. They had Turo businesses and they got all these cars under their personal name. Oh God, don't do it. I did it. It's a nightmare, right? But I had this one gentleman, he had like 5 cars, and of course they had sprinkled late payments throughout them. So his credit was just trashed. And he had all of this debt on his personal credit report that was preventing him from buying a home because he had too much debt. So his debt to income ratio was just super high, super out of whack. And unfortunately, he's just not going to qualify for a home until some of those auto loans, like most of those auto loans, are paid off. So you can still get autos in your business if you have a business, if your business is real business and set up properly and you've got some revenue flowing, you can totally finance vehicles in your business name. Sometimes they will require a personal guarantee, right? And that's okay because that's not going to report to your personal credit. You just want to make sure. For example, Mercedes-Benz, do not finance a business auto with Mercedes-Benz because it will report on your personal credit. How do I know? I didn't. And guess what they told me? No, it's not going to report on your personal credit. Again, those guys are salespeople, so they're going to tell you anything they can to get the sale. But Mercedes absolutely reports to your personal credit because the way that they write the contract is your business name, and I think they do and or your personal name. So some do report, but the ones that don't are like Bank of America. And honestly, they're probably one of the better ones to get because even though it may not be 100% financing, it could be depending, like not every deal is the same, right? But they don't require any, documents or finances. You can finance up to 4 vehicles with a PG as long as you have at least like a 700 credit score with Experian. And it's a really easy process. So that's why I like Bank of America for the business financing. And then, of course, like there's other banks out there that have commercial financing. And as long as they can confirm that this is, in fact, not going to report to your personal credit, then, definitely look into that. But don't finance a vehicle because even with something like this, right? If you have a car loan, student loan, credit cards, and then say your rent, right? That's $1,875 for your bills. And then on a $5,000 a month income, your debt to income percentage is 37.5%. So that's a little on the high end. Like I said, a lot of lenders want you to be at like 35 or below. So if you were to take out that $400 car payment, you're going to be below the threshold and you're going to qualify. But because of this $400 car payment, you're not going to qualify. All right. So that's why it's so important to understand debt to income and not buy that really expensive auto that we all want. And is cool. Right now you just need something to get you around that's dependable and, not fancy until you get your dream home. Once you get your dream home, you got somewhere to park it. You can do whatever you want within reason. Right. But most mortgage lenders want your DTI to be 36% or below, but I would say like just to be on the safe side, 35%. So make sure you work on that and getting those debts paid down. And of course, like before you apply for any mortgages, make sure that all of your credit builder loans are paid to zero because even though, say, for example, you have a credit strong account, right? A credit strong account is not necessarily like a real debt, but you're still paying $350 a month to that account, right? Because there's still a balance due. So their system doesn't know how to out it necessarily. So that's why if you have like a secured loan or like a credit strong loan or a credit builder loan, you close out all of those first and make sure that they have reflected that you have a zero balance before you even apply for the mortgage. And that's another reason why I tell people don't add your rent to your credit report, right? And if you do add your rent to your credit report, make sure it's like a super low amount, because that is going to affect your debt to income ratio. They're going to see that as a debt on there. So sometimes it's just best to kind of leave that one out, right? Because you can easily say that your rent's like, you know, $500 a month, $600 a month. I wouldn't probably go more than like $800 a month, just to be on the safe side. Key differences, kind of, we went over all this stuff. Again, this guide's going to be inside of the community. It already is. And then I'll have it inside of the classroom section. But let's talk about FICO scores versus Vantage scores. This is really important because a lot of times, all of our credit scores that are given to us by, say, Credit Karma, or some of the banks out there like Capital One or Chase or whomever, right? A lot of those free credit scores are usually calculated using a Vantage 3.0 scoring model, right? And a lot of people, one of like the biggest questions that I get is, every time I go to look at my credit score, it's different. So I never know what my credit score is. And it's like, that is so true, right? Because of the fact that you're looking at different FICO scoring models, right? It could be Vantage, it could be FICO, right? So when you're looking at, say, the Chase one, or even let's do the Navy Federal one, right? You have to look at, okay, how is this score being calculated? Because it's going to say in the very small print, how is this score being calculated, right? Is it a Vantage? Is it a FICO? Is it a FICO 8, right? Is it a FICO 9? And then who is this credit score from? Because it's only going to be from one credit report. And usually it's going to tell you this is a FICO 8 via Equifax as of this date, right? So there's three factors: how it's being calculated, who it's from, and what date is this as of, right? Because sometimes those are outdated and for whatever reason they haven't updated. Like I looked at Credit Karma and my Equifax hadn't updated in like 3 months. And that's how I knew I had a block or some sort of internal lock on there, because I usually use the My FICO score and I didn't have any issues with My FICO, right? Because I can go on My FICO and I can look at all of my different FICO variations and get a good understanding of where I truly am as of real time, right? I still only get a report like once every 30 days, but I get my scores pretty frequently. And while, generally, if you are going to see your score somewhere, it's probably going to be like a FICO 8 if it is a FICO variation. But you have to look at those details because it's very important, because different credit products are going to use different FICO versions. Okay. No bank out there is going to approve you with a Vantage credit score. All right. The only places that I've ever seen actually use a Vantage score are property management companies. Like, that's really it. If you're getting pre-approved for something, that's possibly, a Vantage score, but all of the banks and financial institutions, when it comes to approving you for a credit account, they are going to be using the FICO, which stands for the Fair Isaac Corporation. All right. And it ranges from 300 all the way up to 850. The FICO 8 and the FICO 9 are probably the most common FICO scores, right? And those can be for like anything, but a lot of times when you're going after an auto, they have particular FICO scores that they use. When you're going after a home, they use particular FICO scores. They usually use like a FICO 2 or a FICO 5 score to approve mortgages, right? And unfortunately, the FICO 2 and the FICO 5 are always significantly lower than, say, your FICO 8 or your FICO 9 for whatever reason. And all that it is just different algorithms. They focus on different algorithms. All right. So when it comes to like a auto FICO, as long as you pay on time, you have other comparable credit that you paid on time, and everything is good with regards to auto, then you're going to have a higher FICO score for those autos, right? Same thing with like the bank cards. They have different FICO bank cards. So FICO is heavily influenced on, number one, paying your bills on time, okay? And number two, how much credit on your credit cards and lines of credit are you using, right? What is your credit utilization? So that right there is about 65%. No matter what FICO variation, that those two categories are most important, okay? Paying your bills on time and making sure that your revolving credit lines are really low. All right. Now, FICO mortgage scores, they're older, they're more strict. The FICO 2, the FICO 4, and the FICO 5, right? They're just old school and they're always significantly lower. And it just sucks, but they are. But if you have the MyFICO app, it'll show you that. And honestly, the more that you don't open new accounts, pay your current accounts as agreed, and just keep your utilization low month after month after month, those scores will raise over time. And that's what you want. Stop opening up new accounts with these FICO 2, 4, and 5, and age your current accounts. Once all of your accounts have been like over 2 years, these scores are going to be a lot higher because they focus on some of the simple things like not over accessing credit, not opening a ton of new accounts, all those great things that are important, right? And then we have the FICO auto scores 2, 4, 5, and 8. Okay. So sometimes you can see that, when they are approving different banks or different scoring systems, they might use a different bureau, right? Sometimes you'll go to a car lot and mostly they're going to pull from like Experian. And then you'll see maybe a couple from TransUnion or a couple from Equifax. The most common one is like the FICO Auto 8. And honestly, that one's very similar to your FICO 8 score, right? But again, this kind of focuses on your auto loan history and the performance of your auto loans that you've had in the past. Have you paid those on time, right? If you have not paid them on time, this score is going to be lower because you're a higher risk. So it's important that when you get these auto loans, you pay them on time. And if you're having a hardship, call and get some of the payments deferred to the end of the loan so it doesn't affect your credit score. The FICO bank card, these are for credit cards. So again, it focuses on that type of credit, how you have managed credit cards in the past and your ability to repay them back on time. FICO 2, 4, 5, and 8. Right? These are the bank card ones though. So there's so many different FICO variations, but the most common ones for most loans and banks, about 90% of lenders for like credit cards, personal loans, and lines of credit, they're going to be using FICO 8 and FICO 9. Navy Federal, they generally use a FICO 9 scoring system. So generally when you see FICO 8 and FICO 9, they're pretty similar. There could be, 20, 30 point difference, but this is the outline, right? FICO 8's more forgiving of a single late payment, but really strict on individual credit card utilization. FICO 9 ignores paid collections, less harsh on medical debt, okay, but can include rental data. So you're adding your rental history can really help with a FICO 9 score. Now, the newest models that have just recently been rolled out, and honestly, I have not seen any bank out there approving people with a FICO 10 as of yet. It takes a while for the banks to start adapting the new FICO models because I feel like they're always like a new one coming out. And a lot of banks right now are still on FICO 8 and FICO 9. Thank God, because FICO 10 is going to be a little bit stricter with regards to history. So right now, your FICOs are really, focused, hyper focused on like the last 12 to 24 months, right? They're like, okay, let's zoom in on the recent history. And that's kind of where they pull a lot of that data from, right? But the FICO 10 is really going to be focused on the last 24 months total, right? They're looking a little bit deeper down the hole to make sure that you're not a risk. Like, have you been paying your bills on time for the last 2 to 4 years? Okay. That's essentially what they're looking at. And that's why people that have a history of paying their bills late need to get it together right now and make a commitment to themselves today, right now. No more late payments. Okay. None, because it's going to affect you in such a negative manner when FICO 10 is starting to be used because of your ability to pay late, right? And they're hard to get corrected. And, if you can, great, but let's just not even try to have to do that. All right. So that's the majority of what is being used right now is basically FICO 8 and FICO 9. All right. There's other FICO scores, and there's so many different FICO models, but you don't really need to focus on all of them. I tell people, if you get the My FICO app, it'll give you a rundown of all of your different FICO scores. And that way, based on your goals, you can kind of get an idea of what you need to do. In a nutshell, stop opening up new accounts, focus on the accounts that you do have and just aging those and growing the limits and keeping your utilization low, and you should be good to go. That's why we don't want to open up a ton of new credit accounts all the time on our personal credit. After we get to like credit card 6, I would say no more than like 8. Just stop and then age those to go and get credit cards on the business side. If you're a big credit card person, like myself, I like to use them to get the rewards and the points and travel, free travel. Like on my Southwest card, I have a travel companion, so I can bring someone to travel with me for free. So that's well worth it, right? And that's why you use the credit cards for those rewards. When I signed up for my Chase credit card, they gave me, I think it was like $800 or $750, something like that. If I spent, I was like $3,000 or $5,000 in the first couple months. That's easy to do, especially like if I'm running ads. So I got that $750 for just doing what I would normally do, which is spending money, right? So it's worth it if you use it wisely. And of course, it took me a couple trips to figure it all out. I bumped my head a few times. Don't feel like, I'm perfect. I'm not. I had to learn just like everyone else. But what I did was I finally sat myself down and said, look, I'm bruised enough. I need to get it together, and I need to have more self-discipline when it comes to financials, and I need to document everything, and I really need to understand what's coming in and what's going out and get my shit together. And that's sometimes what you have to do slowly but surely, and have that monthly sit down and go over your finances and make sure that you've got everything, calculated, and exactly what's coming in, what's going out, and everything looks great, and you're paying your bills, and you've made sure that everything was, good to go, right? So what's a Vantage score? It's really like just a free idea of where you're at, right? The reason why I like Credit Karma is because of the data points, right? Because if you log into Credit Karma, the cool thing about it is it's going to tell you, hey, here's the data points, right? I'm not sure if you can see this. I'm going to show you mine. I wish I could share it with you guys, but it's such a pain to like log in and stuff from my phone for that Zoom. But credit factors, right? So I have an 809 on TransUnion, right? If you scroll down, this is where all the credit factors are. And it's going to tell you these are the credit factors, and this is what you need to work on, right? Credit history, we want it to be 100%. Credit usage, I'm at 2% right now. I have $250,000 worth of credit on my profile, on my personal credit profile. I did that on purpose so I can go get business funding, but yet I'm only at 2%. I still have like $4,000 to $5,000 of credit debt right now, but it's only 2% because I have so much available, right? 0 derogatories, credit age, 5 years, 4 months. I told you guys, when you get the credit age over 5 years, that's usually when your credit starts hitting that 800 mark. Total accounts, 43. I have way too many accounts, guys. Okay. Take a lesson from me and don't get that many accounts. Not all of them are open, but I have 25 open accounts, 18 closed. I'm still in the green because I have shown and proved my ability to pay on time, right? But you just don't need that many. You need between 10 and 20 accounts on your credit profile. You only need between like 4 and maybe 10, no more than 10 open, like 4 to 6 open, really, right? And then hard inquiries, I only have 1 on there. So these credit factors have really been helpful for me to show my clients like, hey, even if you don't understand much, go into Credit Karma, look at these factors, and this is going to tell you where you should focus your energy on. A lot of people, they just need to make some adjustments in paying on time, reducing their credit utilization, and understanding how to take care of some of the negative things on their credit report. And then over time, making sure that you just manage that stuff so you don't ever have to pay anyone to do things for you, because a lot of this stuff is like nobody can do for you, right? Nobody can really fix you paying your bills on time. Nobody can really fix what you spend on your credit cards, right? Those are things that you have to do from the core and have to understand, right? So this is the Vantage. I don't think I really want to go too much into it because honestly, it just doesn't matter. Vantage is just something that's like free to us to get an idea of where we might be. And generally, when you're looking at Vantage to FICO, sometimes it's usually about a 30 to 40 point difference. It could be higher, it could be lower. I see both, right? So, it's good to kind of compare it. I always look at like my FICO and then I'll look at, Credit Karma. So for example, like my credit score on Credit Karma with TransUnion is an 809. And if I log into my FICO and I look at TransUnion as of today, and this is a FICO 8, it's an 808. So it's pretty close, but there are some differences. So you always want to go with the FICO and whatever the FICO says. Another good app for FICO is Experian, right? If you subscribe to Experian, you can usually get them to go as low as like $14 a month by calling in and saying, hey, I really love your, service and your credit reports, but I can't afford, 25 or whatever they charge. Do you have any promos where you can give me this for like $14 for like the next 6 to 12 months? And usually they will say yes. And then you just call in every like 6 to 12 months and keep on getting that same price. So these are all the different Vantage scores, 1 through 4.0. A lot of times what we're looking at, especially like if we use like Credit Karma, is a Vantage 3.0, right? Sometimes it's a 4.0, but usually it's like the 3.0 that we're seeing on a lot of these like free apps that we get. And I think even with like the Navy Federal one, it's not from TransUnion. So a lot of people, they don't pay attention to who it's from. And it's only going to be from one credit report. All right. And you always want to look at like where this data is being calculated from. I think with Navy Federal, see, they used to be a Equifax bank, right? Back in the day, they were an Equifax bank. Now they're TransUnion, right? So I'm trying to see where their stuff is from real fast. So their mission credit confidence, it's loading. I guess I haven't done it for a while. View the new dashboard. Okay. So with Navy Federal, it's based on a Vantage 3.0 scoring model. All right. And who is this as of? I want to say it's from Equifax. It's not saying it because they just got a new system. and they're showing me their new system. But let me see if I can confirm that for you guys, because that's what we have to look at. Sometimes they try to be sneaky and say, oh, this is what your score is. Okay, well, who is that data from? And when is that data as of? And, I need the details on this. So, even Navy Federal, they got me at like a 811, but now it doesn't tell me and in like a bird's eye view where it should, where this data is being calculated from, right? And a lot of times you can do like this the credit stimulating, and basically it'll tell you what you need to do to pay off your credit. But I'm just telling you right now, a lot of times it just has to do with the credit utilization and then paying on time, right? So another big question I get is, how long does it take to build up credit? How long does this whole thing take, right? That's like the number one question. And it's crazy because some people that I work with will get done super fast. And I'm like, okay, well, like we've got all the negative things off. Now it's on you. Like it's all on you. And I think it happens kind of fast for some people and they don't know what to do because they didn't necessarily take action from the beginning, because they're like, oh, well, I got bad credit now. And like, I know we're working on it. But like when I work with people, I want to make sure that they are interactive with it and they are starting to build credit from day one and starting to make strides towards that, because it's a process. Building bank relationships is important, because you going into like Wells Fargo and asking them for a credit card to build credit with, they're probably going to tell you no, right? And even if you do go in there and you have very little credit, they're not going to give you high limits, right? A lot of people want the high limits. So that's why we want to start with the credit unions and let them kick it off for us and get a couple high limits with them. And then we can go to our neighborhood banks, because we've kind of already built that, comparable. And, Wells Fargo and some of these other like well-known banks like PNC, they're just really not known for super high limits. They're about a 10K approval off bat without like a serious relationship. I'm just going to be honest with you. I mean, I have a really good profile built out, and Wells Fargo, those son of a bitches, they gave me like $4,000 on the Reflect card. And I called them back to tell them I don't even want this. Like, no, because I think they gave me like 10K on the Built card. And I was kind of like, man, that sucks, right? And it was either 8 or 10, right? But it was super low limits compared to what I have on my profile. So that's just more confirmation that I needed to be like, man, Wells Fargo sucks. But I've never had anything with Wells Fargo because I've never had good enough credit to qualify for them. So it's kind of like a flex at the same time, because it's like, for me, I was never able to qualify for these banks. So now that I can, it's like, okay, I got my foot into the door. So let me just build up to it. And the Reflect card has 0% interest for 21 months. That's why I got it. And so I'm using that as like my primary spend card right now, spending, paying. So they'll eventually raise my limits. And then the Built card, I don't know if you guys are familiar with it, but it's great for like paying rent and just good for that. And that's why they give higher limits, because they give bonuses and points and stuff like that for paying your rent with this card. So it could be worth it for some people. I personally don't use it for that. I just kind of have it to add more available credit to my profile and have it part of my arsenal. But I don't think I've ever used the card, to be honest with you. But it's also good to have in case you do need it, because you just never know. So it's always good to be prepared, not need it and then, it's always there if you need it. So building credit, I would say, it takes time. We can't rush this, right? So at least 12 to 24 months is optimal, and waiting 6 months in between each time that you go after a funding sequence. I've seen people that have gone after funding sequences much faster than 6 months. I don't recommend it though, because in this day and age, we're in a whole new like arena. It feels like every year we're in a new arena, right? And the arena that we're in right now with the recent like change of leadership is, I feel like more people are reserved, right? More banks are reserved to like really give out the amount of funding that they were prior. And maybe that's because they don't get as much funding. I don't really know. But at the bottom line is we have to stand out from everyone else that's applying for funding. So it's always best to over prepare, right? And look better than everyone else. That's the goal, right? Because of course, if we build it properly and you build it properly over time, it's even more solid because your foundation doesn't have any cracks in it versus trying to rush it and getting all these crappy trade lines that nobody's ever heard of. You know, like I love primary trade lines because like they're a super hack, right? But at the end of the day, the downside to them is they're with unknown banks. Okay, let's just be honest, right? So they do help, but if you're going after some funding, it may be questionable to them. Like, hey, can we truly use this account? Because we've never heard of this bank. And that might trigger them to look further into it. Like, hey, we can't find this bank, you know, who knows? But I just want to, you know, reiterate that trade lines are to enhance what you already have. You have to build it up and then you can start, you know, incorporating the trade lines because that's when, you know, whether you have them or not, purchase the, you know, primaries, you're going to probably qualify. You're just going to qualify for more with the primaries because they're going to add that limit that we're all looking for or maybe missing, right? So once you have, you know, built up some credit history, you know, you want to just make sure that you keep that momentum flowing. You wait 6 to 12 months before applying for things in between time, because that's going to reduce your history with the credit bureaus. So history is 15% of your credit score, right? So let's see here. We kind of talked about this already, is like using the secured loans to build up credit for at least 6 months. But, you know, I've seen people where they paid off their secured loans too quickly and it didn't give them the impact that they were hoping for. So when it comes to these credit builder loans, it's really important to keep them open for a minimum of 24 months, I would say. We can pay the balance down, so you only owe them like, you know, 10% or less than that. So it's not really going to be affecting your debt to income, right? And they're not really going to be affecting you when you apply for credit cards. So we want to try to keep these open for as long as possible. Like 12 to 24 months is absolutely ideal, right? And that's why we always want to start with them so they can just sit on there and, you know, age your credit history. Same thing with like Credit Strong. That should be like one of the first accounts that we add. So that way, after, you know, we've been working on our credit to kind of clear up the negatives, that account is still there, reporting positive every month, and you're paying it on time. So let's talk about the credit unions that give the highest limits. I know recently someone was asking like, hey, what credit union should I join? Right. And I kind of went over some of those last night, but I know we have different people on the call every day. So I want to go over some credit unions that are going to give out the bigger numbers, because that is most important at this point right now. Because during the repair phase of your credit, we are focused on building bank relationships, building a secured loan if you have the funds to do it, or whatever funds you can possibly put towards it, do it. Minimum's 250, right? If you can do a little bit more, obviously that's better, right? Um, doing a Credit Strong, because that can be anywhere from a $10,000 to $30,000 trade line. And then, you know, once you have opened up a credit union and you've built a relationship with them for at least 3 months, all right, we don't want to apply for any credit cards or anything for at least 3 months. All right, you can apply for the credit builder loan because that's not going to cost you an inquiry. And it's going to start helping you build credit and build that relationship with the bank. You just have to make sure the funds are in your savings account, because that's what they're going to use to secure the funds. So it is going to be your own money, like a secured credit card, but it's just in a secured loan form. All right. I'm going to take a quick break. I'm going to grab some water, guys. So if you need to grab some water or use the restroom, now is going to be a great time. We'll take 5 minutes and then we'll come back and we'll get into these credit unions. And then I am going to answer questions at the end of our calls today, because I do see that there are some questions here. So I'll answer those towards the end, but let's take a quick break and use the restroom, get something to drink, and we'll be back in 5 minutes, guys. All right, I'm back. We just got a new puppy. So, oh my goodness, it's like having another little child. All right, guys, I hope you're all back. We're going to get started with these credit unions and why I love them so much, because they heavily invest in their members, right? I had no idea. I've never heard of Navy Federal. I had never heard of any of these credit unions before I really got into credit. Like, I had always just banked with, whoever I see driving down the road, Wells Fargo, Chase, Bank of America, the big named ones that we all see, right? Now, credit unions, they're really a game changer, because a lot of times you have to be a member with them in order to apply for their credit products. So I had someone recently said that they applied for NASA Federal Credit Union and they were denied. And it's like, well, that's probably because you're not a member with them. You have to become a member with these credit unions. And the trick to applying for their credit products is the relationship. They are very much relationship based. So if you take the time to invest in that relationship and make sure that you're building up for your funding, you're going to get a lot more in return, guys. Okay. Now, if someone had a really great credit score and they're like, hey, I need some funding like right now, could they get funding from a credit union prior to, waiting 3 months? Sure, absolutely they could. And I've seen it happen before. But I'm giving you guys best practice, right? If you want the most amount of funding and you want to do it the safest way possible to maximize your approvals and the amounts that you get, this is going to be the blueprint, right? And if for some reason you feel like you did not receive the maximum amount and you're not happy with the amount that you received, you can call into the reconsideration line and ask them for a reconsideration. All right, just Google that reconsideration line. If you were denied, call the reconsideration line. I've actually had to call the reconsideration line. I did when I got the Navy Federal auto loan. It was my third auto loan, right? So I thought, well, damn, they're just not going to get me a third auto loan, right? But I applied for 60,000. All right. Now, mind you, I already had 2 auto loans that were fairly new, like no more than 2 years apiece on my credit report. And then I asked them for $60,000 auto loan. So they're probably thinking, no, like, we're not going to give you a third $60,000 auto loan. Like, your debt to income ratio is going to be outrageous. And we don't think that you can pay us back as agreed if we give you this third $60,000 auto loan. Right. So I called them and I said, hey, I got denied. I got good credit. Would you be willing to give me, say, 30,000? And the lady on the line, I can hear her typing in the computer and punching away at her numbers and stuff. And she goes, yeah, 30,000 would work. I can get you 30,000. So she got me approved for 30,000. And then I just went to the branch and I brought in my ID and they printed my check right there at the teller's window. And I took it to CarMax. And the rest was history, nothing out of pocket. And I got a Toyota Camry and I got it for Turo. Those are my favorite cars for Turo, by the way. And, just in general, they're great on gas. So number one is Navy Federal, right? They are the number one credit union, not just because I think so, but because I think so. And because iBankNet tells us Navy Federal is the number one credit union based on their deposits and their assets, right? Look how much more they have in deposits and assets than your other credit unions. Okay. And this is why it's so important to get into Navy Federal. And if you have had bad blood with them, clear it up. Okay. They are one of those banks that if you have had bad history with them, you have to pay it back in full in order to come back in the future, versus like Chase, you can settle with Chase and come back in the future, not with Navy Federal, right? I have a gentleman that I'm working with right now, and he included Navy Federal in a bankruptcy like a long time ago. It's not even on his credit report. And it was like over 10 years ago. They will not, to this day, give him any funding or any credit. It's ridiculous. But had he known that, then he said, you know, maybe things would have been different, but life happens, right? So now he's just not able to go to Navy Federal, but there's all these other credit unions that you can potentially go to. But of course, Navy Federal is the one that kind of kicks things off for everybody because they're not so focused on the credit score. They understand people don't have perfect credit, but they have an internal scoring system. So as long as you build up that relationship, and like we always talk about, get those 5 banking products, checking account, savings account, with Navy flagship checking account, high yield savings account, maybe do a CD account or 2, $1,000 minimum, and you're not going to have access to it, but they love them. And you're setting yourself up like seriously with Navy, because all banks love CDs, because then they can like 10x that money. And, you know, they're going to have full access to it for whatever your term is, usually like a year. You're not going to have access to it at all. So that money's going to just be locked away, but it's also going to be a little nest egg for you earning interest. So it's a nice way to build up your portfolio. Direct deposit, having that, it's not necessary. It's not a requirement. It just helps, right? It's just best practice. Now, when I got all my credit products with Navy Federal, I didn't have direct deposit. I was able to max out at 80,000. I was able to get 2 auto loans from them. And now I'm at the point where I've gotten everything. All my balances are almost zero with them. I only owe them maybe 8,000 on an auto loan. I paid one off. So my next thing I'm going to get with Navy Federal is I'm going to go after that $50,000 home improvement loan. No docs, and you don't have to own a home, and you can just say that you have a property that you're going to be doing solar in. I love using solar because banks love funding solar, right? So Navy Fed's great. You can get up to 80,000 with their credit card limits. Their flagship card goes up to 80,000. So if you're looking for 2 high limit cards, I would recommend just getting 2 cards from Navy. You can get the green cash rewards card first, and then the black flagship card. So the green cash rewards card, this is always my starter card with Navy Federal. Even though they might tell you that you're pre-approved for some of their other credit cards, the green cash rewards card is always my first one that I tell people to apply for, because it's usually like a 25K off the bat approval, right? I get these all the time. Not the secured, but the cash rewards card. This is now like their secured card. So they used to have like the in rewards card, right? Notice it's no longer there. It's the Go rewards, and it's not secured. So they have these other, you know, cards that you could potentially get. But I like to go after the cash rewards card first as like a boom 25K approval, wait 6 months, and then go after this Visa flagship card. It does have an annual fee of $49, but it's a great card. And this is the card that goes up to $80,000. And then every 6 months, ask for the credit limit increases. With Navy, to maximize your limit increases, I would call over the phone now, because you can ask for a limit increase on the app, and it's not going to give you a hard credit pull, but you cannot tell them what you want. They're just going to give you what they want. All right. Before, you can tell them, I'm looking for 10,000, and they'll say, sure, yeah, okay, no problem. But now it's not like that unless you call, right? But calling is going to result in a hard inquiry. You can get that hard inquiry removed. All right. Don't worry about it. I have gotten every inquiry that I've ever had with Navy Federal removed. Okay. And it was no big deal. All right. So that would be my recommendation. Some people have gone about it a different way and we're still happy. Okay. That's not the only way to go about it, but that's just the way that I would go about it if I had to do it all over. And that's the way that I see people with the most success because, usually when they apply for this green cash rewards card, they've only been with them for like a few months, maybe 3 to 6 months at this point, right? Now, if you have a long standing relationship with Navy, you haven't had any recent overdrafts or overdrafts, period, because an overdraft with Navy Federal in your checking account or a savings account is a huge red flag and can really reduce your internal score tremendously because that's a huge red flag for them. So don't allow your accounts to get below like 25 bucks. Make sure that you have overdraft protection set up, their OOPS plan. That's another credit product with them. Basically, if your checking account does go negative, you have a savings account that's got some money in it that can cover that spend. So, one thing that's kind of cool I want to mention is this American Express branded Navy Federal card. I'm not a huge fan of it. This was the first card that I applied for, and they gave me $500, and I was angry about it because I'm like, fuck them. Like, I want this $20,000 credit card everyone talks about. Like, $500. Like, I was so angry, right? But my second card was 20,000. I didn't know about building the relationship. I didn't know nothing about the pledge loan, right? That's why I got a $500 card. I did not focus on the relationship or the pledge loan or any of those things. And basically they were just kind of giving me comparable credit to my credit cards. All right. But what this did do for me was it got me into American Express's system as a member. All right. So when I went over to the business side of things and started applying for business, now mind you, American Express was always one of those banks and some of those cards that I deeply wanted and I had to have, right? So I was actually able to get 5 American Express business credit cards by this one card getting me into their system, right? So I didn't know it at the time, but a year something later, it got me into their system. And I got this Navy Federal American Express branded card in 2021. So what it did was it gave me my member year 2021. So that Navy Federal card definitely got me into American Express's system and helped me qualify for 5 American Express business credit cards. And the way that you do this is you just make sure that your credit score with Experian is over 700. It's best to do this with a business that's at least 2 years old or close to 2 years old. All right. Revenue for the business needs to be very high, especially with American Express. If you go too high, they might request tax returns. Don't apply for their business line of credit unless you have tax returns, okay? Because I've had a lot of people where they did not understand the assignment and they got enticed by the business line of credit instead of the credit cards, and they applied and they asked for tax returns, and then it was a dead deal because they didn't have them. But yeah, these are the 4 cards that I ended up getting. I got 4 credit cards with 1 inquiry because I just applied back to back to back. I was sitting at the gas station waiting for like a guest on Turo, and they were running late and it was late at night. And I said, I'm just going to apply for these American Express cards. And I got the first one approved. You always want to start off with these 2 blue cards. Now they look exactly alike. And to be honest with you, I did not know that they were 2 separate cards until American Express told me that I owed them money and I hadn't paid. And I was like, what? There's no way. And that's when I realized that one is a business cash card and one is a business plus card. So they are 2 separate cards, but they look almost the same. But these cards do not have an annual fee, and they're great for starter cards. So if you can get these 2 approved first, keep on approving, keep on applying until they tell you to call in. That's what happened to me. I got 4 cards before they were finally like, hey, can you call us and make sure that it's really you? Because I'm getting so many cards, right? And then I got the 4th one approved. And the next day, within the next 2 days, I think it was, I'm like, man, I didn't get the gold card. And that's the card that I really wanted because of the fact that the gold card is the best card to use when you're running ads. This gold card will give you 4 times the points on your 2 highest spend categories. So if you are spending on ads or you're spending on like shipping, postage, which is like 2 of the highest spend categories for me, I put it on this card. I don't even keep these cards in my wallet because they're just like usually online purchases, right? And I don't want to be getting in the habit of swiping too much because believe me, I've had to learn. But yeah, that's how you do the American Express. I called in over the phone. They gave me another hard inquiry. American Express is generally pretty good about being able to approve someone via soft pull. But if you call in over the phone, it's usually going to be a hard pull with any bank, not just American Express, but like Navy Federal too. But I know I kind of went off on a tangent there, but I just wanted to kind of share with you the long-term effect on my mistake that I didn't know that I was doing. So you guys can learn from my experience and learn from my lessons, right? Because you guys, if your goal is to get into American Express, that's a great way to get into their system. And they probably won't start you with a $500 limit, right? I've seen people that have still gotten a little bit of higher limits with that American Express branded card. You know, it just wouldn't be the first card that I would go after. But then you can just continue to ask for credit limit increases. And the maximum that you're going to get is 80. Believe me, I tried to go past 80 and I actually got approved for more than 80, but then they realized I was already maxed out. So they just like reduced it. I was like, oh man. But you know, the show must go on. PenFed is a good one, right? But downside to PenFed is they don't have a business side. So PenFed is actually the 4th credit union on the list here based on deposits and assets. They also do the pledge loan. They're going to be Equifax for credit cards, Experian for loans and lines of credit. Same thing for PenFed, build up that relationship, 5 banking products or more. PenFed is sensitive to inquiries and new accounts and balances on credit cards. Okay. PenFed is very old school. They are one of the only banks that I know of right now that still make you fill out a paper form to add an authorized user. Yes, they do. They have a form. You have to print it out on their website. It's a pain in the butt. And you have to upload it to add an authorized user. So they're very old school. And they're also the ones that were telling me about having too many balances on your card because it's a risk, especially to a very conservative bank like themselves, where they're very old school. They're very like risk factor orientated. If you've got too many new open accounts, you need to wait with them. You can also pre-qualify for them online via soft pull. They're really good for their personal loans. And if you need like a higher limit personal loan, 25K, they're great for that. You'll even see PenFed, their loans being offered by like third-party service providers. Like I've seen them on some of the websites that, you know, give you all these different personal loan options. And, you know, it's best just to go straight to the source because you're going to get better rates. They're also really good for auto loans as well. So PenFed, DCU, Digital Federal Credit Union, they're good for their credit cards and also approving people with a lower credit score. Now, DCU has had a long history of like approving people for personal and business cards, right? However, right now they're going through like a merger, right? So right now, DCU and First Tech are becoming one, and I don't really know what that means for their future, right? Because DCU is a known Equifax bank, which is why I love them because you're not going to find too many banks out there that just pull Equifax, right? Even like PenFed, they've been known as the Equifax Bank forever, but now they're in, putting in Experian there. So DCU is been great for personal and business, but now that they're merging with First Tech is a Experian bank, and First Tech is one of those banks that's going to pull your credit just for joining. So, I don't know what the merger is going to entail. I was very pleased with the merger that happened for Truist, where it was basically SunTrust and BB&T. That was great because they are a wonderful bank. Truist is amazing, and if you can qualify for Truist, although they're not a credit union, if you are in their territory, you definitely want to join them. They are very much a relationship based bank. And, since they had that merger, they're really trying to grow their business. So they have amazing personal credit products, business credit products. And then once you get their business credit card, you can go after the business line of credit. Their business line of credit used to be no document up to 50,000, but unfortunately, the internet killed that for us. So these are kind of the details of the DCU and First Tech merger. It's expected to be done in 2025. So, I mean, if you go to their website, you're not seeing a whole lot about it, right? I don't see a whole lot about it, but and I don't really see anything about it on their website. Um, and if you go to First Text, let's see, are they saying anything about it? I don't really think they're having too much mention about it on their website. Oh, here, if you scroll down long enough, DCU and First Tech announced their merge. So we'll see what happens with this merge. Who's going to kind of take the lead on it? I'm thinking that DCU is going to take the lead on it because it's saying DCU and First Tech, right? And DCU is a bigger credit union than First Tech. So, I mean, well, let's see. Actually, based on assets, First Tech is 12 and I'm not missing them up here, right? Ooh, oh, there they are. So First Tech is 12 and DCU is 17. So technically, First Tech has a larger deposit in assets than DCU. So we'll see. I don't know. But it's going to be interesting to kind of see how all of that plays out. Now, in my personal experience, when banks are going through mergers, they are giving out less funding. So it's not always a great idea to join a credit union while they're going through a merger because they may not be giving out a lot of funding. A lot of times when they're going through those things, they kind of slow down on giving out funding until that merger has been completed because it just gets messy, right? So if I were you, I'd probably skip over them for right now, even though they are great. But if you already have them, work the relationship that you already have. I know a lot of people that are like, oh, yeah, I do have this bank or that bank. I just don't use them. Right. But if you have a direct deposit, spread the love, spread the wealth. If you are independently employed, you might want to think about, ways to put yourself on payroll that could be creative or actually signing up with a payroll provider like ADP and then spreading the love 10% here, 20% here, spreading up your check to kind of build those relationships. And most importantly, like when you sign up for these new accounts with banks, sometimes they'll have welcome offers like BMO Harris. They're always sending me an offer to sign up for a checking account with them, and they'll give me, like a few $100. And in fact, I have a whole class on banking accounts that will actually pay you to to join. And I want to say that one is right here, making money with the banks. So go under the classroom sections under the bank and watch this video. And this is the presentation. And it talks about all of the different banks that have welcome offers. Now, obviously, welcome offers change and expire, but it's just to kind of get those wheels spinning to think, man, if I'm going to be, searching for some credit unions to build relationships with, I want to find some that I can, take advantage if they have a welcome offer, because this can make you upwards of $1,000, because some of these places are offering a few $100s for you to come in and open up a bank account. Like Truist, for a long time, they had like a $400 offer to open up a checking account. And then, you have to read this small print to make sure that you're following all of the qualifications. And with theirs, it was mainly just, swiping your debit card a bunch of times, and then, having direct deposit, right? So I don't see that they have a welcome offer right now. I could be missing it. Sometimes you actually have to do a search for it to actually come up, because a lot of times they try to hide it. So that's what I did last time, was Truist. Oops, if I can spell it right. Welcome bonus. Let's see if it comes up. See, it says right here, it's offering a $400 bonus, but where is it? I don't know. But you kind of get the idea. Sometimes you have to search for them if you don't see it. And a lot of times these welcome bonuses are usually only available if you sign up online. Like PNC, they have a $400 checking offer right now. BMO Harris, I kind of just talked about them. But you just have to read the small print and make sure that you're qualifying for it. And usually it's pretty easy. You just have to spend a little bit of money or have direct deposit. Direct deposit is usually like the key qualifier for these, accounts when you want the bonus on it. But yeah, if you can get into Truist, oh, here it is right here. Earn $400. Okay, that's small print. Usually it's a lot bigger, but this is a small business one. So they have welcome offers on personal and business. So if you're going to be opening up some new accounts, look into these welcome offers. And sometimes you have to like literally search like the bank and the welcome offer, because sometimes they can be kind of hidden and stuff. But I feel like Truist is always offering some sort of welcome offer, and then they say it's going to expire, and then they always extend it. Alliant Credit Union, they are pretty good as well, and they're known for higher credit limits. State employees, now if you look right here, the state employees is number 2. Their deposits and assets are a lot higher than your average credit union. So this is definitely a credit union that you would want to take a look at and see if they, meet all of the boxes that you're looking to check off, right? Do they offer business side? Do they have the secured loans, right? What's the highest credit limit that they have? And a lot of times you can learn a lot from their website and just kind of researching, and to make sure that this is something that you're going to want to invest in, right? Because you want to invest with credit unions that, number one, have a secured loan so you can not have to do the secured credit card, right? And, if you have a business, you want to make sure that they have a business side. I always like to look at their, here it is right here, shared secured loans. That's what we're looking for. All right. Signature loans, I always like to take a peek at those, because generally they're going to tell you about how much the maximum is. Sometimes they don't list it, but I love it when they do say like, oh, it's up to 100,000, right? Credit line increases. So, you guys can do your own research on these credit unions, but these are the ones that have the most amount of assets. So obviously they have a ton of money to invest in their members. And the great thing about these credit unions is if you invest in them, they are going to invest in you. It's like a real relationship that we're building with these folks. 𝒂𝒊𝒂𝒅𝒊𝒕, they're another great one. You know, if you look on the list here, they're definitely up here. I was just looking at this thing the other day and I was like, man, a lot of these credit unions that I have been talking about and seeing lately, a lot of these are like top 50. 𝒂𝒊𝒂𝒅𝒊𝒕, number 28. All right. Another one that I like is the Police and Fire Credit Union, because again, these service-based credit unions or community worker, I don't know how to really say it properly, but you know, community worker, someone that works to better the community, teachers, police, fire, all of those type of credit unions that specialize in those type of things, they are going to heavily invest in their members. Okay. I was looking at Apple Federal Credit Union because I love that credit union so much, but they make it so hard to get in now, right? But they specialize in teachers, right? They give up to $50,000 credit cards. And that's exactly the type of, you know, data points that we're looking for. And I actually had a client that got in there back when they were allowing you to join an association, right? Now it's a little bit harder. It's like geo restricted and it could be harder, but if you can find a way into Apple Federal Credit Union, he was giving me exactly, like, I gave him the blueprint of like 5 banking products. He sent me their rate sheet, which I actually have inside of school, and it's inside of the Apple Federal Credit Union. And I sent you a screenshot. He got $35,000 credit card with Apple Federal Credit Union. And this is their rate sheet that they had as of like May of 2025. And the cool thing about it is their money market accounts, right? And their certificate accounts. Their certificate accounts start at $50 minimum, right? And that's pretty cool because a lot of times these certificates start at like $1,000. So it's like, you know, your average person, they might not have $1,000 or $2,000 to lock away for 12 months, right? But $50, $100, we could easily do that and have it locked away for 12 months. And that is a huge plus. And that's exactly what he did. Was he signed up for like 2 of these starter certificates for $50. He did like $100 money market. He did a checking account and he did a share savings account, which the share savings, you know, it's, you know, just regular savings account. And then he didn't even do a pledge loan or anything. He had some high limit trade lines on his credit report and he got $35,000 credit card. And that, you know, doing those things, that's just going to help, you know, other banks fall in line to approve you for those same types of limits. And that's the beauty of these credit unions and the power of these credit unions, right? First Tech Credit Union, we talked about them. They're going to be merging with DCU. Golden One, they're great because they give out minimum like $25,000 personal loans. I helped one of my clients get a 25K personal loan. He had a relationship with them. He had all of his money going into Golden One, direct deposit. He didn't really have like any banking products besides his checking account. He just had a checking account that had, you know, always, you know, money coming into it from his direct deposit and no documents, no nothing. They gave him 25K. But he didn't pay it back. And that's a shame that someone would think that 25K would be enough to ruin your relationship with them or, you know, ruin your credit over something like that, because it's not enough. You can like totally 10x that, more than that. You could like 100,000x that with your credit. But unfortunately, he got 25K and then didn't pay it back. So you really have to make sure that you know, are doing this strategically. Like if you get 25,000 as a personal loan, you could do so much with that to help strengthen your personal credit. Like when you get a $25,000 personal loan, your mindset needs to be, this is not money to spend. This is money that I'm using to invest in my credit report to make it stronger, to make me have more positive credit trade lines. So I'm the most qualified candidate that goes up for funding, right? Because what we're doing is we're decorating our credit report to get approved. If you build it, they will come. I'm telling you, if you build it, the funding will come. It takes time, right? A lot of people, they fumble the bag the first round. And I just don't understand that, you know? But, you know, I look back when I was uneducated, you know, and even though I can say that I would do the same, it's like you just don't understand the longevity of it all when you are uneducated. You don't really care, I guess you can say the word is, and you don't think about the future. But in this day and age, we have to. Okay, we have to acquire property. We have to do all of these things. Why? Because nobody's going to do it for us. All right. We are the ones that are responsible for our credit. Nobody can fix this for you. All right. You shouldn't have to pay someone to fix this for you. You should know what to do, how to do it, and why we're doing it, right? We're getting a $25,000 loan so we can have a great credit profile and show lenders that we can be trusted and we can pay back as agreed. If I got a 25K loan or 50K loan, I'm going to go and put that money into credit unions that I'm building with, right? Navy's out because I've already done that with them, right? I've already pretty much like maxed out. The next thing that I do with them is really not going to need much more. I've already shown improved to them, right? So I could take, say that, you know, 25K and I can go open up a new bank account with, say, state employees credit union, right? And when you open up a bank account with 25,000 or more than 10,000, your bank rating score is going to be a lot higher, right? Because banks, they have internal ratings, right? So when you deposit low amounts, you're, you know, lowly rated, nothing special. But when you make a large deposit, that initial deposit of 25K, your bank rating score is going to be a lot higher starting out. So you're already kicking this thing off on a positive note. All right. Now you do a 25,000 secured loan, put a trade line on your credit report, right? Now I can move that same money out and I can open up a new bank account. So now I just kicked off 2 new bank accounts that have an initial bank rating score up there. I'm already kicking this party off, right? I'm going to do another secured loan. I'm still going to have to pay both of them back, right? But I'm creating these positive trade lines without getting a hard inquiry with grade A banks that are rated top 25. All right. It doesn't get much better than that. Right. And then later on down the line, you get funding with them, you get credit cards with them, you get loans with them, you get business credit with them. You know, you just kick things off. Andrews Federal Credit Union, they're another one that's really, really great. And I am a huge fan of Andrews, and they're pretty easy to get into as well. I want to say even like the ACC will get you into Andrews Federal, but even going to like these credit unions, if you're, you know, like, hey, I just want to join this one credit union, I don't want to have to do much else, right? Like with NASA, you might just have to join an association that would get you access to become a member. It's kind of funky. Like with PenFed, I did that. I think I made like a $5 donation to something. And mind you, this was like years ago, so I don't really remember. But yeah. Now you'll notice Andrews, they're kind of like military based a little bit, right? Yet another one of those credit unions that's a service based credit union. And that's why they, you know, heavily invest in their members. They're another one that offer gift cards, right? They have Visa business cards. Perfect. So I always like when I see gift cards because that means that you can usually use your credit card to buy the gift card, right? And then they also have, credit cards. I would not do the build or rebuild your credit with them like this, right? I never want to use a credit card with a credit union that I'm heavily investing in because it's like wasted, it's a waste, right? Instead, we do the secured loan. I'm always going to say that. You're probably going to hear me like, I'm so tired of her saying this goddamn secured loan. Like, shut up already. You said it 20 times tonight. I just want to make sure you understand. And the more times I say it, the more times you're going to do it, even though I might be getting on your nerves with saying it. Okay. But I'm so serious about it because it's a hidden hack that not a lot of people are going to talk about. Your average person that's helping your credit repair is not going to tell you, right? But it's such a hack. And a lot of these places offer the refer a friend program. So you can make money off of this as well, which is pretty cool. But they have a lot of different programs, insurance, all that good stuff. So definitely one that you want to look into. I always like to look at their loans too, because right here you can see business loans. Okay, that's a good check too. I like to look at like if they have home improvement loans. I love home improvement loans because of the fact that they are usually a higher value, right? And they love funding solar. Banks love funding solar. So even you can see right here, their signature personal loans go up to 50K. So if you can say, hey, and look at right here, remodeling project. So this can be used for home improvement. All right. That's what you want to go after. You can, and my favorite one is solar, but you can get creative if you wanted to and say, hey, we're, remodeling the kitchen or whatever. But I just like solar because I never have anyone flinch at it. They're like, oh yeah, no problem. So easy peasy, lemon squeezy. Those are the banks that you want to focus on. If you have any other banks that you want to look at, use iBankNet because it's a great resource to be able to find, the credit unions that are the top rated because of the deposits and the assets. This is one of my favorite websites to use along with oh gosh, I always forget the name of it, but it will come to me. iBankNet, and there's another website that I like to look at that will give you like the states based on, location, all the banks in someone's location. But, a lot of these credit unions, it doesn't matter your location. Like some of them are geo restricted, right? But a lot of times, like even with NASA, you can join these associations and still get access. You can join the, financial fitness one, still get access, or the ACC, right? So there's other ways and creative, techniques that you can use to get into some of these credit unions that other people have probably never heard of, right? So what makes credit unions approve higher amounts? Relationship banking. I talk about this heavily, right? Manual underwriting. All right. Big banks, they usually use, the same type of systems, but many credit unions, they have loan officers who actually manually review your file and might approve large deposits or large limits based on income, job stability, and your low debts and your relationship overall. And you can even call in and ask to speak with the, reconsideration folks and see if they will reconsider it and do a manual review to reconsider approving you for whatever. Or, if you don't get approved for 50K, maybe you'll get 35, that's still pretty good. And of course, they're going to have lower interest rates, usually anywhere between 2 and 4 points below your average market, right? So let's talk about the importance of personal credit and business funding. Because while they are different, They are very much the same because you are the owner of your business and you are probably going to be the guarantor for your business funding, right? And business funding is qualified based on credit, right? Cash flow for the business. But if somebody doesn't have cash flow and they're like, I'm new in business, cash flow isn't the best, I don't really want to discuss that. I just want to be able to personally guarantee credit with my personal credit. You can still do that. And that's what a lot of people do the first 2 to 5 years of business. Yes, 2 to 5 years. It takes a time to build up a business, guys. Believe me when I tell you this, because I thought, man, everyone else, they look like they just have overnight success. And like, what is taking so long, But it's a process and you just have to be focused in your lane. You can't be focused on other people and what they're doing and how they're portraying their lifestyle, because at the end of the day, a lot of that stuff is not real. And what kind of like made me realize that was that whole Ashley gal that I don't know if you guys have heard the story, but she was one of the many success stories that I would hear on Credit Repair Cloud's podcast, like when I very first started. And her story was she worked at the post office, she started a credit repair business, and she just had a ton of success, right? And then she started selling courses and she was like making millions of dollars from selling courses, right? Well, she just got in trouble for some big scandal, and I believe she just went to jail. And it was because she tried to take somebody out. And this is her story right here. She was sentenced for hiring somebody to kill a couple as a business rival. And that is crazy to me. But she got 10 years behind bars after plotting to kill a Mississippi business owner. And it was basically a, higher plot. You can read the story here, but it was just crazy. And it was all because of social media. And this gal was selling out her courses in minutes. She earned $1 million in 40 minutes through selling a digital course. And sometimes courses are not the best, let's just be honest. Like, I'm sure the course was probably not worth $1,000, right? So I'm sure that a lot of people had something to say about it, and not everyone was satisfied, which you're going to have that, right? But I mean, God, this is a crazy story. Okay. And this is just crazy. I mean, I don't know how else to say it, but it really opened my eyes to a lot, because I was like, wow, she's having so much success. That's so amazing. Like, she started a credit repair business. She started selling her courses. I remember like following her story on social media, and she had this big, beautiful house, and she got married and she had a child, and she just had this dream life that we all might think she's just got this perfect damn life, right? And it's something to really be motivated and intrigued by, like, oh my gosh, like, oh man, I want to do the same thing, And it really is like eye-opening when you see, oh my God, right? But it's still motivating to the point where you're like, she still made millions of dollars, right? She still took action, and she turned what she really was passionate about into something like a course that she was just trying to educate the world on, right? And then a few people had bad things to say about it and were really bashing her. And my God, what she decided to do really did change her life. And I believe, I don't know if her and her husband are still together or not, but I remember she had got him wrapped up into this situation too. And I believe he was not found guilty because it was her doing. But yeah, just a crazy, crazy story there. But you know, you hear these other people too, like for example, you know, during my time when I was really infatuated with these stories, and now I became one of those stories. You know, I gave my story on Credit Repair Cloud, which was just super amazing. And it felt great. Like I was like, man, I finally got to that point, right? But I remember listening to the Credit Dude story, right? And he is the gentleman that had a lot of success, was an Army vet or whatnot, and then he got connected with celebrities like DJ Envy, right? They were doing a lot of business together. And then DJ Envy and Caesar got wrapped up into that fraud business. And, you know, it's amazing because you think, wow, you know, the Credit Dude, he was, you know, working with all these celebrities. He got DJ Envy on his team. So he was like, you know, had all this celebrity like stuff with his credit repair business, right? But at the end of it, it brought nothing but bad publicity to his business because of who he decided to like partner with, right? Because he saw it as this is my opportunity. And I remember hearing his story saying, man, he would just sit in his basement stressed out because he didn't know what to do. But instead of creating content and providing the world with value, he was in celebrities' DMs trying to partner with them, right? Yep. And he partnered with these celebrity guys, and they are now being indicted for fraud. Okay. Mr. Caesar is really into a lot of bad stuff because they are now being hit by like the FBI and stuff like that. Caesar Pina, he was arrested in October of 2023, and these are the guys that, you know, he had all over his credit repair business. And you know, feds hit DJ Envy's former business buddy with a bunch of stuff. Like it's just crazy, right? And man, just to think like this dude was partnered with these guys, right? And I can't imagine like that feeling good, right? And then I saw that the Credit Dude had like commented on something saying that he was, you know, they got him for fraud too. Oh, he probably, yeah, well, man, sounds like not a good thing because, you know, so just be careful. Like sometimes bringing in the wrong type of partners can really be a negative thing for you, right? Because look at this DJ Envy, former business partner, the Credit Dude. You know, now all these guys are being blasted for shady business. DJ Envy exposed. Like you don't want that type of drama, you know? So it's like leave that stuff alone. But it's just crazy. But I don't know how I got off on a tangent but that, but you know, it's just like you look up to these people and at the end of the day, they were focused on the wrong thing, right? We got to focus on positivity and providing value. But nonetheless, importance of business credit, you know, why it matters so much. We kind of covered all of this stuff, right? The difference between authorized users and primaries. Obviously, you know, your own credit accounts are most important. And then we use trade lines like authorized users and primary trade lines that you can purchase to help enhance everything, right? Because sometimes they're not going to be the end all be all. Like someone was asking me earlier today, so that does that guarantee like an instant approval? And I'm like, no, nothing guarantees an instant approval, you know? There's no such thing as an instant approval. While I would say like, yeah, it's more likely that you're going to get approved, sometimes you just don't know, right? And especially if you aren't set up properly or you haven't checked off all the boxes, there's a lot of things that could potentially go wrong, right? But you just want to make sure that you have built up a really strong foundation that's going to be hard to crack, right? The only person that'll be able to crack it is you by making late payments or allowing the utilization to go a little haywire, right? But you still want to add some authorized users, sprinkle them in over time. I don't recommend adding more than like 2 to 3 at a time. 2 is the sweet spot, right? I don't see a real difference with adding the third. So that's why I always tell people, like, if you're going to add trade lines, add 2 and then wait about 6 to 12 months, because your credit score is going to take a dip, right? There's no doubt about it, because you're adding new credit, and whenever you add new credit, your credit score is going to go down a bit, right? So there's going to become a point where you're probably going to need to add them again to add more age to your profile. So add 2, wait 6 to 12 months, and then add another 2. And when you're adding authorized user trade lines, remember, the most impactful thing to a credit report is the history on the authorized user trade line, not the credit limit. All right. The credit limit is going to help with many things, but the history is going to be what increases the credit score. You know, obviously, adding more available credit to your profile when you have high utilization is also going to be a huge factor. But usually you can expect sometimes between 2 and 5 points per year, right? Somewhere around there. But like, if someone has a really thin profile, they don't really have much going on at all. If you added like 2 trade lines that were even 4 to 6 years, that would give them a 700 credit score right there. But what I call it is synthetic credit, because while the score looks good, they still might have a hard time getting approved for everything that they want because they don't have any credit that's in their own name. It'll probably be easier for them to get credit cards, of course, but other things you might have to kind of guide them along the way. Or even if it's you, there's other things that you might have to do, like creating those other installment trade lines. So what we must do on time, long term, obviously, pay the bills on time. That's number one. Okay, you're going to hear me say that a million times. Keep the balances low on the credit cards and lines of credit. All right. Avoid having too many new accounts too quickly. All right. It's okay, 2 to 4, every 6 months or so. I would say no more than, you really don't want more than like 6 new accounts per year. All right. That's pushing it. Right. That's like someone that's like really heavily ready to build credit. And sometimes it's okay. Right. But it's really not needed. Okay. It just looks like you're trying to get too much. So you want to slow play it. All right. Because if you get like, 12 accounts in 2 years, like that could look like a bit of a risk to some banks. Right. So you want to go a little bit slower, because again, you don't really need more than like 6 solid credit cards. If you have other credit cards that are not solid, we're not going to count those, because eventually we're going to cancel those out and get rid of them once like we're okay on all of our other cards, right? But our goal is to have about 6 solid ass, well-known bank credit cards that are 10 to 30K. All right, that's the goal. Obviously, the higher the better, but we're focused on real quality stuff here. Let's see, having a mix of accounts. So you're gonna need credit cards, plus you're gonna need loans. And I have a lot of people that come to me that are like, hey, I'm kind of like a cash person. Every time I buy a car, I pay cash, or every time I buy a house, I pay cash. And it's like, okay, that's cool, that's great, I love it. However, we need to put our cash on our credit report. We need to show that we can be, trusted with these type of credits. So it's always best to try to get the funding for these accounts, and then you could pay it off within a year or 2. But let's at least add that credit account to our credit report and get 12 to 24 months of payment history there. And the faster that you can pay off larger debt, obviously that's a great thing. The banks still want to make a little bit of interest, so I recommend 24 months. That's kind of the sweet spot. Plus, you want to show your ability to pay on time over time. And what I've had some people do is they'll prepay for like, months at a time. But you just have to make sure that the banks apply it properly, because sometimes they don't, and that can be a mess of a situation. And then, of course, you want to check your credit reports regularly and compare them with others, right? Because sometimes weird things happen. Like, I was actually mixed up with a family member just recently. Their information got on my credit report. It was odd. And, a lot of times it's just because your family, or you get mail at the same address, or you have received mail at the same address. It can happen for a number of reasons, but you got to be aware of these type of things, because that's when Equifax does weird shit like put an internal lock or block on your credit report. It's most common with Equifax, especially if you have moved. So when you move and they're not able to verify you because your address is all of a sudden different, they're going to put an internal lock or block on your credit report. And a lot of times you're going to see that, like if you have clients that use Smart Credit and all of a sudden you don't see Equifax's credit data, it's just gone. It's like it doesn't exist. That's what happens. So you have to call Equifax, or the client has to call Equifax and remove the internal block by verifying their self over the phone. And a lot of times they can just upload their social and ID. They'll send you an email. It's a new system. So while you're on the phone, they send you an email and you upload your docs right then and there, and they verify you right then and there, and they remove the internal block. Right? Then you wait about 24 hours, and then you can call your credit monitoring company, whether it's Smart Credit or whomever, and let them know, hey, I had a block with Equifax. I need you to reissue me a new credit pull and see if Equifax will populate. And just make sure that whatever your current address is, that your credit monitoring company also has that address on file, because that can also lead to them not being able to locate your credit report. Because that happens to me all the time, and it's super frustrating with my clients. Like, Equifax will just disappear. And sometimes, like, I've had clients where it's been months and I still can't get their Equifax report. Like, I'm still having that issue with one guy right now, and he just called and they said it was resolved, and it's not. So it's like, oh my God, it's like a circus dealing with them. But again, you just have to treat it like a full-time job. So if you want big business funding, focus on building your personal credit profile with strong primary trade lines, then layer on authorized users and maximize your age and your utilization. Don't focus on building your business credit with a bunch of these net 30s and subscription-based bullshit, because that is not going to get you funding. Right? I did it. I wasted so much time and money buying business trade lines with like subscriptions, and like, I think it was like the T-shirt business club and all this bullshit, the business plan to pay for, Red Spectrum. It's just so much stuff that I bought, and all that it got me was a gas card that now is on my personal collection, which is crazy because it was no personal credit guarantee on it. So it's like, what the hell? Right. And I think like I could have got an auto loan finance through Ally. So I was able to get that, but I never accepted it because the interest rate was so high. It was no PG, but I was just doing it to see if I could, right? And to see what I could get and what I couldn't get. I got approved for the Sam's Club card, but what happened was I gave them the wrong phone number to verify my business. And with Sam's Club, the way that it works, especially if you're applying in store as a business, you have to give them a phone number to verify the business. It has to you have to have a real business telephone number, and they're going to want to call the business and for someone to answer and verify the business, right? And I accidentally gave them the wrong phone number. So that basically got me disqualified. I got everything else approved, and they couldn't verify the business with the business phone number because I gave them the wrong phone number. And I should have been looking at my business phone number while I was talking to them inside my business ID card, but I didn't. And that's where I messed up. But, I got a lot of store cards, gas cards, things that basically, if mismanaged could just cause debt and it's not really worth it. That's exactly what happened to me. And that's exactly what I see happen to a lot of people who get that Sam's Club card if they don't have like a vending machine business or something that can truly use it to make money. They get that Sam's Club card, they spend it on their personal needs or just building a business, and they don't have a lot of revenue to pay it back, and it just causes debt. So sometimes those things can be totally skipped and not really needed. Some people find value in them, but the Sam's Club MasterCard, which is like one of the only EIN only business credit cards left, is a super high interest rate. It's like 25%. So they're not really doing you any favors unless you can truly use this card to make money, like with a vending machine business. But, that's a whole nother topic. The bottom line is your personal credit is your foundation, right? If you want big business approvals, you have to show that you can manage some big personal approvals, all right? And that's why a lot of business owners don't qualify for funding, is because they don't have their personal credit built out properly. They have crappy credit cards that are maxed out, $700 credit cards that stay maxed out. It doesn't make any sense as a business owner. All right. Because it's just like, it just doesn't look good in the bank's eyes, right? They look at that like a super high risk. Most lenders, back in the day, I would say 680. Like even a year ago, I would probably say you might be okay getting approved at a 680. But I just don't see that in today's market. All right. And that's why I say you have to be able to look better than everybody else on paper. All right. You have to understand how to look good on paper. And this is how you look good on paper. All right. This is how you don't get them to ask you for documents or verification. You just pay on time. All right. But make sure that whatever you're using as your like credit application information, please write that shit down. Okay. You should have a Google Doc that has every question that you have answered on a credit application and the answer that you use. And you're going to use that same data for the entire year. All right. And you're going to probably use that same data for like a year or two, right? Because the data will change over time, but you don't want to change it too quickly because that can raise some red flags. So if they ask you what you pay in rent every time you fill out an application, it's going to be whatever amount you put, right? The sweet spot's about 5 to 800. Okay. Now, if you are in a state where, rent is a lot cheaper, 500 is where you want to be. I'm in California. They may find that like, oh, wow, only 500 and you're in California, right? So if you are in one of those states like New York or California, or even like some of these other states like Florida, you might want to put like $800 just so it's like believable, right? Household income, projected income, all of these answers need to be documented, because a lot of times the data that you put on your credit applications is shared and is stored with LexisNexis. So of course they're sharing that information with other places, right? So when you go and put in your next application, a lot of times they already know the answers to these questions, but they just want to see if you're going to use the same information or if it's going to be all over the place, right? When that data is all over the place, that's when it starts causing red flags. And now you've kind of been bucketed. All right. You want to make sure that everything is consistent. You're using the same name variation. You're using the same address variation. All right. Everything is exactly the same every single time you put in an application. If you're just using first name, last name, you're going to use first name, last name. You're going to skip the middle on every single application. All right. Because we're only focused on required data. So that's first name, last name, birthday, social, right? But then the data sometimes changes with people because they forgot what they used for rent. They forgot what they used for income. damn, did I put 180? Did I put 130? I don't remember, right? That way you're making your funding ID card and putting all this information into a spreadsheet or a Google Doc. So you put that same data in every single time. And then when it changes, maybe in a year or two, maybe your income goes up, right? I just got a raise. All right, great. So just make sure that you're super consistent, right? Because if your personal house is not in order, you cannot expect to grow, right? If you're not in a good space, you can't get to the next level. And that's just how it is. You have to make sure that you're able to manage everything properly and be in a good space in order for you to get to the next level, right? And sometimes you just got to, you know, go a little bit slower, but you're going to get there as long as you take small strides and try to get at least a few things done every day or every week, depending on how much time you have on your hands, right? The bottom line is you're taking action because we want to get to a 720. Right? That's what lenders want to see. I went to lunch today with one of my good friends. She works at City National Bank. She's one of the SBA underwriting team. She's in management. So she oversees all of the underwriting department. All right. And right now she's the interim manager. So she's really overseeing everybody. And she even shared with me that they are tightening up, right? There are certain industries that they will not fund. There are certain deals that they will not fund. They will no longer fund commercial real estate because it's just too high of a risk, right? So it's kind of great to, have a friend that's so involved with SBA lending because City National is one of the larger SBA lenders. And they're usually like an Experian bank. And on the business side, they look at Dun & Bradstreet just to make sure that you're a legitimate business. They also look at Experian business, right? They also look at your financials. You do not have to have a bank account in order to apply for funding with them, but you do have to have your shit together. You do need to have tax returns. If you want big funding, it doesn't need to be anything crazy, but they just want to make sure that you're a legitimate business, and legitimate businesses file taxes and at least have 1 year's worth of tax returns. And there's different funding programs. There's microloans, which, kind of says its name all micro, tiny, under 50K, right? Then we have the 7 loans, we have the 504 loans. So there's different loans that are SBA. I kind of put some information in school about the SBA stuff, but as long as you have your financial records in place and you have shown some growth and they can see that and you have a plan together. I've gone over how to create a business plan for the SBA, and it's inside of the classroom section. So if you are a business and you have not put together your business plan, you need to come on over to the Business Credit Masterclass and watch all parts 1 through 5. Part 4 was so long, we had to break it up into 2 parts. But part 1 talks about the address, the foundation, setting up that business plan, and making sure, most importantly, that you have a business plan that's SBA approved. All right. Because they have to see the potential, they have to see the growth, and they have to make sure it's going to be worth the investment for them. All right. And of course, having strong credit, they're going to do a personal credit check for sure. But they're also going to, it's not going to be on your personal credit. That's the great thing about it. Build credit hacks. We talked about this, stick with Discover. It says open 2 to 3. I would say, the less is better with the secured credit cards. If I had to go for a second, it wouldn't be Open Sky and it wouldn't be Capital One. It would probably be US Bank, or Bank of America, but not any of these subprime places. I hate them. I hate them. I hate them. Installment and mix. We already talked about this. We're going to do credit strong. We're going to try to go after as high of a credit strong as possible. 10 to 30,000 is optimal. And then, of course, utilization, keeping that below 10%. And then you're going to set yourself up for business funding, right? Once you set yourself up for the personal side and you have 12 to 24 months worth of history and you have limits of 5K or better, and your credit scores are 720 and more, you don't have any late payments, you have the cards, pretty much all zeroed out, right? You can have all but one. All but one, meaning all cards to a zero balance but one. And this is kind of what it looks like. You're going to start with the business credit cards. You're going to get 25 to 50K worth of business credit cards. A lot of those are going to be 0% interest for anywhere between 12 and 24 months. So when people are advertising, getting people funding, and they're saying, hey, I can help a business owner get 50K, 100K, 200K at 0% interest for, 12 to 18 months. A lot of times that's just a fancy way to advertise that I can help somebody get business credit cards and charge them 10% of whatever they get approved for, but you're going to get 0% interest for, 12 to 18 months, because that's what the funding companies do. They charge 10% of whatever they get approved for people. You guys can do your own funding. You don't need a funding company. You don't need to pay someone 10% of what you get approved for, because you have the blueprint right in front of you. And a lot of it has to do with you, your personal credit, and you can build up your own relationships with the banks by walking into a branch or going on LinkedIn and simply, reaching out to relationship managers that are from different banks that you want to partner with or that you want to build with. That's exactly what these people are doing. And honestly, you can probably go look at some of your people that you've listened to that have a funding company. I don't know. I don't really know of anyone that I would say, but popular people that specialize in credit card stacking. Go follow them on LinkedIn and see who their connections are, and go follow all of their bank connections, because I guarantee you that they are connected with their bank connections on LinkedIn. So sometimes you just got to be an investigator. All right. And it works, believe me. After you get the business credit cards, because all the banks now want to start off with the business credit cards, even if you're a fairly new business. Like I've seen, I helped a gentleman, he wasn't even in business for a year, but he had strong financials. He had a great revenue stream, and he had an 800 credit score, right? Not Bank of America. Well, he got approved with Bank of America too, but it was US Bank that gave him $50,000 business credit card for 12 months with 0% interest. And that's what he wanted. He wanted a high limit business credit card so he can stop spending money on his personal credit cards, because it was killing his utilization. And in his business, it takes a lot longer to get paid for invoices. So that worked. And then he can work that business credit card for the next 6 to 12 months and then start going after the business line of credit. And that's what all business owners want. They all want the business line of credit, so that way you can withdraw the money against it. And of course, these are not on your personal credit, so they're not affecting you. And of course, when you have higher limits on your personal side, you're going to get higher limits on the business side. And there are still banks out there that if you build the relationship up right, they're not going to request documents for a $50,000 business line of credit. And some banks don't require a whole lot of documents. Like, for example, I was working with a client recently, and he was telling me that the Bank of Nevada, right? The Bank of Nevada, if you go and build a relationship with the Bank of Nevada, they have business lines of credit that do not require any documents. And that is very, very rare. All right. Because a lot of times, either banks want to start you with the business credit card first, or they kind of want documents for the business line of credit. So I'm like, yeah, I'll definitely share this with the community, because that's a gem right there. Bank of Nevada, I don't know if they're geo restricted. I haven't got that far into it, but if someone who's looking for a business line of credit here is a potential lead that you can use to investigate and see if this would be the right bank for you. And, you want to open up a bank account with them first before you just ask for the business line of credit. Because if you're not in the state of Nevada, you definitely are going to need a bank account with them. So, this is the Bank of Nevis. Actually, I'm looking for the Bank of Nevada. Bank of, maybe if I put spaces in here, I don't even know what they look like because I had never heard of the Bank of Nevada before, right? Western Alliance Bank. This is it. Bank of Nevada. But there's so many banks like this that are small hidden gems. So it's so important for you to really look at, hey, what are the banks in my area, or what are some of the banks that others have talked about that I can get into that don't require a whole lot to get the business line of credit, right? Because they're harder and harder to come by, right? I think a lot of people really kind of put a damper in business funding after the whole like COVID-19 thing. It got really popular, and then everyone was taking out the business line of credit, no docs, and it just killed it. It just killed it for everyone. So now it's really hard to get it because they immediately want to make sure that you're a real business. But if you have solid personal credit, it shouldn't even be a problem. You know what I mean? Your credit profile can speak for so much, including a business line of credit. So quick checklist: 2 to 3 not secured cards, maybe like 2 at most secured cards, and then other secured loan. High limit credit strong. If you need the history, rent reporting, utilization under 10%, checking your credit reports, making sure you're getting rid of all the negatives or stuff that's just not helping you. Stuff with old late payments, old negative accounts. Just try to continue to dispute it until it's gone. And then add AUs for age and boost. We kind of talked about why your personal credits matter so much. It literally can be the difference of you getting approved or denied for business funding, and whether or not they want a bunch of documents or not, right? So this is kind of the position that you want to put yourself in for business funding. 3 to 5 well-paid primary trade lines. All right. 6+ months of seasoning for all of those accounts, right? So if you have maybe one new account that hasn't quite reached 6 months, wait, it's not time yet. All right. More than 6 months is obviously better. The longer that you can wait and give your current accounts on your credit report the most amount of time to kind of age and show your ability. And even then, some banks might want 12 months. All right. Less than 10% utilization overall as a whole, but only balances on maybe 1 or 2 credit cards. Optimal is all but 1, right? 720 credit score, and then you're ready to get your business funding, right? Less credit inquiries, the better, right? 2 is kind of optimal. But most people that haven't applied for credit in the last 6 to 12 months, those old credit inquiries aren't going to really matter too much, right? Make sure you have auto pay set up for the minimums on all credit accounts to your credit profile. It is mandatory. All right. And then you can always pay more as the months go on. And, just making sure that you're paying attention to this. Don't close old credit cards that you don't use. All right. Even like if you have an old Macy's card set up and it's like your oldest credit card, but you don't really use it, keep it open. Use it every other month or so, or once every few months, once every quarter, just to put a little spend on it and then pay it right off. Because if you don't use some of these cards that have the oldest history on them, they could close it due to inactivity. And you don't want that because it's helping your history. We don't ever want to close cards unless it's intentional, like, some of these secured credit cards that we might not need any longer. Like I just finally closed my First Progress secured credit cards, and I was like, it's not going to hurt. It didn't hurt. And I closed the Open Sky. So I finally got rid of all of those like secured credit cards that I hate so much. Top 15 with verified secured loans. These are the credit unions. A lot of them we've talked about, but there's some additional ones in there if you want to look into it, because some people might not be able to join some of these credit unions, or hey, maybe you have bad blood with some of these credit unions. You got to start over, right? Hey, it happens, but these are ones that you can start over with. There's so much opportunity out there. There's no excuses. All right. Here's additional credit unions that are known for secured loans or credit builder products that are kind of like geo restricted, essentially. Like California, we have Golden One. There's other ways to get in Golden One, but it might be kind of hard. And sometimes it might be hard for me to get into places like Truist, so some places are definitely going to be restricted to your geographic location. That's what I mean when I say geo restricted. And then credit unions, of course, are great for building loans, creating your own trade lines. A lot of this stuff we kind of already went over because I'm so passionate about like these pledge loans, right? More credit unions that you can build with. So all of this stuff is going to be in the school community for you guys to review this guide. A lot of it we've already covered, online lenders that you can use to build up credit with as well and just kind of get some funding. I just use these loans to make themselves pay themselves back, right? And create additional trade lines like Best Egg and Upgrade. Don't get into a habit of taking out loans long term with like over 24 months with these guys, because what happens is a bunch of debt starts building up. So before you take out 2 to 3 more loans, pay off those current loans that you have. All right. Financial institutions that I really do like that are kind of hot right now is Key Point Credit Union, Mid-Florida Credit Union, Chevron Federal Credit Union, of course, Navy Fed. There's other banks out there that are super hot right now, like Citizens. A lot of the banks, honestly, are these top banks right here that we're all looking at, and the numbers don't lie. That's one thing that does not lie, is the numbers, right? Best personal loans to apply for, even when you have a little bit of a lower credit score. SoFi is great because they do up to 100K. You can start a bank relationship with them and it's going to be easier to get funding with them. All right. They soft pull from Experian. And then we've got Lightstream, which is a part of Truist, and Truist was BB&T and SunTrust, and you can get up to 100,000 with them. We all kind of went over that play before, where you go and apply for a pre-owned auto loan as if you're buying it from a private party, and you can apply for up to 100,000. And if you go into the community and you just type in Lightstream, that play is going to come up, and what you need to put in for the numbers, or what this person put in for the numbers. Income was 165K and the approval was 80K. All right. I had a client and they applied and they used like 65K for their income and they were denied because they didn't make enough money. So that's, important, essentially. Discover personal loans. You can get up to 35. Upstart, Upgrade, Best Egg, Avant. You don't want to load up your credit with a bunch of these, like too many of these, because that could also look like a risk. You don't need more than like 4 to 6 of these, right? But you do need some installment loans. If you have student loans, that could kind of suffice some of it. So you would really only need like maybe 2 of these type of ones, right? Opportune, OneMain, Net Credit for, lower credit scores. But these are things that you can tell your clients, or even yourself if you need to. Hey, this is where I'm going to start. I'm going to get one from the bottom. I'm going to get one from this section. And then I'll maybe do like the Lightstream and SoFi. A lot easier for SoFi when you have a bank account with them and you have direct deposit with them. And SoFi is cool too because you can refer people and make money. In fact, I am working on a relationship with SoFi right now, and they've already started. I don't even think I've had them for 3 months, and they've already started sending me notices that I can apply for their personal loan, even though I'm not. But it's just interesting how soon you start getting those notifications now. And I'll share my link inside of school so you guys can sign up and get a bonus. I think they have like a welcome offer right now if you're interested. But SoFi is pretty cool because they have a lot of loan opportunities. They have credit cards, and they approve people, high sixes, I would say. What to look for, anything that you can pre-qualify for, right? So they can not have to just give you a hard pull if they're going to tell you no, right? Like with PenFed and with Navy Fed, they're going to do a pre-qualification. So you're always kind of looking for those pre-qualifications that you can just kind of get an idea if you are going to qualify or not. And a lot of those loan companies, they have the pre-qualification tools. And of course, best time to apply is always going to be after 10 p.m. So you're up against their computer system, and make sure you don't have any fraud alerts on your credit report. All right. Best personal loans and credit unions, banks, period. We've kind of talked about a lot of these, but this is the list. So there's a lot of banks in here. Regions is another one that's pretty good. Citibank, a lot of people don't talk about Citibank, but they're great on the personal side. They have a lot of credit cards. They have personal loans. So it works out pretty well for people. PNC, you have to have pretty high credit with them in order to apply. I have a rep that I work with at PNC, and they want like a 750 credit score with a relationship and a 780 without for business. Personal, it's probably a little bit lower, but that just kind of like sets the foundation of they are looking for that higher level of a consumer and a business owner, right? More traditional bank offering personal loans. A lot of these banks, we see all the time. Bank of America. I'm not a huge Bank of America fan. They do have some things that are cool, but for the most part, they're probably not one that I would really start off with. US Bank is great. TD Bank, Fifth Third, Huntington. Huntington's also one of the top SBA lenders, so I really like them. Key Bank, Truist, M&T Bank, Citizens Bank. All of these really want to build a relationship with them. That's best. Even with US Bank, even though you don't have to and it's not necessarily a requirement, I would say it kind of is with these banks, especially like M&T, Citizens, Truist, because they're very much relationship based. And that's just going to enhance your funding with them if you build up a good relationship with them. More well-known credit unions for personal loans. Again, Apple Federal Credit Union. Love them. If you can find a way to get in. Bethpage, they're good. Schools First. You can review these. Connexes. Gotta love them. Not to mention Randall Brooks. I really like them. They're one of the higher ranked credit unions. They have a lot of good offers. Now, one thing to kind of be mindful of is some of these credit unions may use Elon Financial to fund their credit cards, right? So be mindful of that. Look for those Elon Financial credit applications, because you really don't want to be applying for more than like 2 Elon credit applications at a time. That's kind of like the max, I would say. Why traditional? Probably, I would say traditional is really meant for people that have a higher credit score. There's a lot of funding opportunity out there. Again, all these banks still have to give out money to make money, right? But it's always best to kind of start with the credit unions and then set that foundation, so that way these traditional banks will follow suit, right? They're going to be in competition with a lot of these other banks that you have on your credit report. Those are their competitors, right? So let's make them work. CDFIs, community development financial institutions. If you have a business, you need to get with a CDFI, which is a community bank that specializes in local nonprofit or community lenders, right? They're nonprofit or community lenders designed to serve lower income and underdeserved markets. They're amazing for small business stuff, personal loans, and just more approvals for entrepreneurs and business owners, to be honest with you. And the way that you can look for them is I've actually put a list in before, but I think it actually put it in here. But I'll make a post on some of the best CDFI lenders and the search place to make them. I'm going to put a note in there for myself right now, because these, if you don't have the best credit score and you're working on things, these are still lenders that are going to fund you. All right. And they're great because if you have some sort of business that can help your community, they're really going to be interested in investing in you, because that's what they invest in. They invest in businesses that help their community in some way. Right. One thing that I kind of wanted to say that just came to my head that's kind of off topic is when you are applying for funding, when you have like your address, right? Addresses really do matter. Okay. And I want to kind of talk about that for a second, because when you are using a nicer zip code to apply for funding, it's going to get you better approvals because of that zip code. I've had that situation happen to me where I was applying in a lower income zip code. And then when I changed, it was like a whole different ball game. I saw a drastic improvement of funding applications for myself. And that was just based on my home address. So sometimes when you are applying for funding, maybe if you don't live in the best area and maybe you have parents that do, you can change your address to their address and apply for funding using their address. And you're probably going to get better approvals, right? And it's best to kind of sometimes use the parents' address, because a lot of times, it's a home and not an apartment. If you do live in an apartment, that's always going to be a better situation. Like I have a friend and she's always used her mom's address for all of her mail, right? And even though she hasn't had the best credit score, it's always been like 680 to 700. She always gets approved for like everything she applies for, because that's been her long-standing address forever. And it's like a house in a nice zip code. And it all makes sense now, because zip codes totally matter, especially with your business location. If your business location is in a higher income zip code, that's always going to be better. So when you are looking for a business address, make sure you're renting a real office location, or a place that rents out real offices in a nicer zip code. So it's a higher income, because it's going to help with approvals. But CDFIs are great because you don't have to have the best credit and they really want to invest in their community. All right. Business funding checklist, how to access $100,000 in business credit in business funding. We're not going to go over this all too well because we're already like so many hours in. I can't believe it's already 9:15. That's crazy. All right. But you guys kind of can go through this at a later time and just make sure that you're checking off all of the boxes, right? Don't focus on the subprime cards. Focus on the great cards, right? If you did have to go after subprime, only maybe one, okay? Maybe one. The B of A secured card, that's my pick. Out of all of these, that's who I would go after. I would skip Credit One. I would skip Merrick. Tomo and Pedal, they go off of bank deposits. So it's not credit score based, but it's also a fintech company. So they're not a real bank. They can't give you any real funding in the future. So why even invest in them? No, that's the mindset I have now, right? If I'm going to invest in a bank, whether it's a secured credit card or whatever, I want to make sure that in the future, they can give me something. All right. That's how we want to look at this. And a lot of those type of places simply cannot, right? Stay away from Chime, no Chime. All right. Discover It. Yep. That's good. City. Yep. That's good. Capital One. Stay away from Capital One because they pull all three credit bureaus. We want to stay away. Chase. Yep. That's good. But maybe not this card. I would go after travel cards with Chase because they're a higher limit, even if you're just starting. Mid-tier, okay? These are kind of some of the best mid-tier. These are really the focal point, right? Because these are quality cards. Chase, American Express, Citi, Navy Fed, skip Capital One, right? And they're going to be decent limits. Then we've got more of kind of the premium cards, the higher Amex Platinum. That's going to get you access to the Cetarian lounges, but it's got a $695 annual fee. So if you're not going to be truly using it and makes sense, there's no point of having a credit card that has that high of a fee if you just don't travel, right? Chase, Sapphire Reserve, a lot of travel cards you'll see in here. Travel cards are always going to usually give you a higher credit limit. So that's why I always tell people go after the travel cards, especially with Chase. And if you do like travel a lot, hey, you can really use these cards. It makes it totally worth it. And then we've got section 5, where these are kind of like the invite only, the ultra luxury. If you play your cards right with these banks, then you'll get invites to, the American Express Black Card, the JP Morgan Reserve, some of these higher tiered cards, right? And honestly, when it comes to climbing the ladder, it's really just about managing your accounts properly, paying on time, and not ever allowing a late payment to happen, because these banks, they soft pull your credit just like Credit Karma does. And if they start seeing all these things that are happening, they're going to start slashing your limits and closing your accounts. And that's when all these red flags start going off and all hell breaks loose. So even if you have high credit utilization, you can recover from that. It's a lot easier, right? But just pay on time, please. Credit builder loans, we already talked about where to find those. Credit unions, that's where we want to focus on creating our secured loans from, right? And then CDFIs, I'll put some more information in the community. I've talked about it before, but I'm going to put how to find these CDFIs because it's super important. And then the last thing that I want to cover in today's class is 10 credit unions that offer a 90-day auto deferment, or up to a 90-day auto payment deferral, right? Because that's the cool thing too about some of these credit unions is you can get an auto loan and then not have a payment for 60 to 90 days. So it's kind of helpful, even though I would probably save up that money just to make sure that you have enough money to pay, months in advance. It always feels good, right? But we have People Driven. That's a Michigan credit union. We've got Broadview Federal. We've got ThinkWise Credit. That's in California. Coastline, Freedom Federal, APG, Labor Credit Union. This is TDECU, Texas. Logix Federal Credit Union, TCT. A lot of these credit unions we've probably never even heard of. Some of them I had never even heard of because there's so many of them, right? But if you are looking for an auto, that might be a great thing for you, right? Using those deferrals kind of help save up some money so you're never late. Another credit union that will fund you with bad or fair credit, Christian Community Credit Union. All right. I had one of my longtime people that have watched me on YouTube. He booked a call with me recently and he was like, really sharing his success. And it was like, made me feel good because I'm like, yeah, I'm doing this for the right reasons, because look at this guy's success, right? He was telling me that he didn't have the best credit, but he really focused on building his relationships with the credit unions. And he decided to go with Christian Community and Navy Fed. And he basically did the same thing with both, really focused on the relationship. Christian Community gave him a $25,000 credit card with a low 600 credit score. So this is another one that you can invest in and they'll invest in you, right? 5 more credit unions that will fund you with low scores. Andrews, I told you I'm a fan of them. Pinnacle, American Heritage, Security Plus, Unify, right? As long as you have a stable income, they are going to want to fund you. And even if you don't, just say you do and pay on time. That's how you can get funded, because they're not going to ask you for proof. That's the beauty of it. A lot of these credit unions are no document. They're just going to believe what you put on paper. So you have to know how to look good on paper. All right. Using the bank relationship strategy, we talked about that. These are all the banking products that you want to start stacking up. All right, golden rule, never, ever allow your bank accounts to go negative. All right, don't get an overdraft or non-sufficient funds because it can destroy your internal rating with that bank. And it just is really hard to recover from that. You want to stack strategically, right? And let's see, this talks about the different funding institutions types, a holding company, because these are all the different banks that you're going to see on iBank. Holding company, banks, federal savings banks, and credit unions, right? Those are the top financial institutions. A holdings company is like a company that holds multiple businesses, like Chase, right? So Chase has JP Morgan Chase, and then it owns Chase Bank. So Chase is essentially a holdings company because they hold multiple types of, businesses and, types of products and services, right? Then we have our federal savings banks like Synchrony and USAA, which, USAA is kind of hard to get into, but they are very different, right? They're not quite credit unions, but for example, like USAA, they serve military members and families, while Synchrony is open to pretty much everybody, right? Synchrony does a lot of the store cards, but they are federal savings banks. And they're really focused on just consumer banking, not necessarily the business side of things. They're focused on a lot of savings products. They're mostly online, right? When's the last time that you ever saw like a USAA branch, right? USAA is also really focused on like insurance, right? So those are federal savings banks. And then you've got your federal and state credit unions. And there are not-for-profit financial cooperatives that are owned by their members. And that's why they heavily invest in their members, essentially, right? They've got the funds to do it, like Navy Federal, State Credit Union, Golden One. And then here's kind of the overview of all of those. I'll let you guys go over this a little bit later. We don't need to go over it all tonight because it's already been so much, but I think that's pretty much the gist of this presentation, guys. That's the end of it. So honestly, it's up to you to take action, right? You got to figure out what the best game plan is going to be for you and your budget and your future goals right now. And, go slow, but also take action and start building those relationships. Even if it's just one credit union, I recommend two, but one is better than none. Okay. Because eventually we're going to go to that credit union and apply. Now, if I could pick one credit union, of course, it would be Navy Federal. They are number one, right? So do what you can to get into Navy Federal. I have put together a Navy Federal guide inside of the school community, right? So if you just search Navy Federal guide, and then there's like how to join Navy Federal right here, and the script to join Navy Federal, because anyone can pretty much get in to Navy Federal. But I put together this entire guide on how to join Navy Federal and what to do and the steps for all of that, right? If you need help and you're like, hey, I'm confused on what a good game plan would be for me and my individual situation, you can always book a one-on-one coaching call with me and discuss it further. But hey, watch, of course, not everyone needs to either, right? Watch the classroom section. There's so much information in here, whether you're focused on personal credit, starting a credit repair business, building business credit. Get into this classroom and start watching these master classes. There's the digital products in here, social media, affiliate marketing. I love affiliate marketing, vending machines, so much stuff, guys. So let me open it up for questions. It's been a long night, but does anyone have questions? Oh, okay. I have a question here. What's the difference between a charge card and a credit card? That's a great question, right? So A charge card is where you charge your card every month, but whatever you charge needs to be paid back in full. So there is no credit limit per se, because a charge card is not a pay over time option. It is whatever you spend, that shit's due. All of that shit is due in 30 days. So American Express is the known charge card company. They just recently became a pay over time type of company, but their rates are crazy, right? So don't get into debt with them because they are so used to being the charge card. So a lot of people that have American Express, they don't have a credit limit. They don't have like a pre-spend limit, or they don't have like a limit on their limit. It just says 0 because they don't have a limit, because whatever they spend, they have to pay back in full. So that's the difference between a charge card. A credit card, you have a limit, right? And some credit cards with American Express do have a limit, right? So if they have a limit, say like one of the American Express trade lines that we offer, it has a limit of like 46,000. So we know if this has a limit, then this card has a pay over time feature on it. And a lot of the American Express cards offer the pay over time feature. Some cards do not, like the Plum card on the business side. It is not a pay over time feature. It is a charge card that allows you like a 60-day window, but you still have to make a 30-day payment. And then the rest of the balance is due all within 60 days. Let me see if I have any more questions that I can ask you. If you have a collections with Navy Federal, you got to pay it in full before you can get back into good standing with them. Bank of America graduates after 6 months. Yeah, sometimes they do. Like I've had people where they've had them and they've graduated quickly, but then I've also seen people where they haven't. So it's like, I never can say for sure. I'm sorry, was someone coming off mute and saying something?
Yeah, it was me. I was saying I have, because I started with them, but now they're in collections on my credit report, maybe Federal and Bank of America. And I wanted to
Okay.
know, how do I go about disputing, because, and I'm only disputing online right now due to my situation. So I can't really do the certified mail right now because of the car. But I was trying to see what would be because they're still on my credit report, and the Bank of America one just closed, and then they just closed on their own. That was a credit card. They just closed me out and took my account. And then, because I was overdue, and then Navy Federal, I'm unemployed right now, so they haven't messed with me. And then they just put the account they could put the account in collections and on my credit report closed and charged off, but I still have my checking account with them. So should I just sever the relationship with Navy Federal and just start with a new whole credit union, a brand new credit union?
I would at this point, because you're going to have to pay back that collection with Navy Federal in full for you to get any further credit with them at this point, right? So eventually, like, is the collection with LVNV,
What
or
you
is the
mean?
collection with Navy Federal? How are they listing the collections?
Oh, okay, no. So it's with Navy Federal. It hasn't went to no. It's charged off with Navy Federal
Okay, so
directly.
Navy Federal is still reporting this balance,
Right.
but they sent it to collections internally with Navy Federal.
Well, I didn't mean to say collections. It's just charged off.
Right. Okay. So yeah, that's basically what has happened. It's gone to collections internally with Navy Federal. They haven't sold the debt to a third party. They're just trying to collect on it internally. They finally have charged it off. So you're gonna have to pay them back in full. You can call them and see if, like, when the time is right for you, call them and set up a payment plan. They'll probably be able to defer the interest on it, but you're going to have to pay the actual balance back in full if you ever want to be considered with for credit with them in the future.
Okay, so what should I do if I don't? Because it's $7,000 loan that went default. So
Yeah, you're going to have to just sever the relationship then, because if you don't plan to make good on whatever, credit product you've had with them, they're one of those banks that will not give you nothing in the future. So it's like, what's the point of even banking with them at this point, right? So
that's what I'm asking. Because
yeah,
I'm like,
yeah,
I
go
don't have
somewhere else.
7,000.
I would definitely go somewhere else. And you've got a lot of options. What state are you in?
I'm in Michigan, but the thing
Michigan.
is,
Okay.
how would I do a dispute? Far as send a regular dispute and see if they delete it.
Yeah, you can. I honestly, charge-offs are very tricky because they're with the original creditor, so they don't apply to the Fair Debt Collection Practices Act, right? So they're really, really hard to get off. Um, I might even try like the data breach method if I were you, because if with a regular dispute, I don't think that they're going to take off the charge off, because what's going to happen is Navy Federal is going to continue to verify that the debt belongs to you, right? And same thing with Bank of America. They're notorious for that. So if you try to go like the data breach method and say that your information was exposed in a data breach, blah, 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 you're probably more likely to get something like a charge off because of the fact that they're much different beast than like a third party collection. Third party collections are pretty easy for the most part. It's the charge offs that are really the challenging part. And while you can still get them off, it might take you a few rounds of letters back and forth for them to finally take it off all three credit bureaus.
Yeah, you will have to send me. Can you tag me in the data breach thing? But
Yes, I sure will.
okay, but it's in all. So it's but the data breach is for one bureau, but it is across all three. So what would I do?
Yeah, you can use it across one bureau, even though your information was exposed in, say, an Equifax data breach, your information was still exposed. So if your information was still exposed, that means that things could end up on all credit bureaus.
Okay, you say data breach. Okay,
Hmm. And the
and
proof is already in this post right here. So I'm going to post you in it.
I also had a data breach I sent you with my one of the casinos here in Michigan. They sent me a
Yeah,
letter
you can
saying,
use that too. I would use both and say, look, I've been involved in multiple data breaches, and now all of a sudden I've got these unknown accounts on my credit profile. They have not validated, just go that route and see if you can get them to remove it off. And sometimes with charge offs, they come back because they end up getting verified. I hear this a lot from people like, oh, the charge off came back, but it's only on like Experian. Well, that's a really common problem that happens. But I just put something in the community about how to go about, responding to that. Because essentially, if they're going to reinsert something into your credit profile, they have to let you know. So you
right.
can use this law right here and just put it into ChatGPT and you know, go
Go
about
for it.
disputing it. Yeah, just have ChatGPT write up a quick dispute letter regarding the procedure and how they handled it, because essentially this is the law, right here.
The 15 was 1681 for the basically like I call it like identity theft technically.
Yeah, I mean, however you want to go about looking at it, the bottom line is if they can't get proof, which we all know they're not going to do, they have no proof. So if they have no proof, prove it or remove it, you know?
Right. Because I didn't give you permission to have it in the first place.
Well, I mean, you don't need to give them permission to have it, right? That's the law doesn't say anything about permission, but the law does say that if they are going to report data on us, that they are going to have a, procedure and how they verify the accuracy of this information. And if I'm disputing the accuracy of this information, how are you going about verifying that it's accurate? Because you can't just take the creditor's word for it. They're just going to say that it's accurate, but they're not providing you with any proof or documentation.
Yeah, I might have to email you. That might be a little difficult for me, all the other ones.
Yeah, I mean, have ChatGPT try to help you as far as you can go, and take it 1 month at a time, right? Every month you just continue to dispute what's left on your credit report, because while I don't like to call it rounds, like there's no particular letter that has to be for round one, or your first set of letters or your second set of letters. That's kind of what I consider rounds, right? There's no one way to do it. You just have to continue to challenge them on the accuracy and the validity of these accounts, because at the end of the day, they have no proof.
And do you feel like online is okay? Like for
Yeah,
right now?
online's perfectly fine, because you can upload documents and then call in and say, hey, I have these unknown, things on my credit report. I uploaded the proof to you. I need you to validate them and block this information from my credit report.
Okay. And I have one more for evictions. I'm thinking about going sealing the document at the court and then disputing it. It's in collections now.
And do you know where it's reporting to?
It's reporting to TransUnion so far.
TransUnion's probably getting that information from somebody else. I would request a copy of your LexisNexis report and see if that's on LexisNexis, because if it's coming from the court, it's probably coming from LexisNexis. And then they're the ones that are, shooting it out to everybody. So you want to freeze LexisNexis or opt out, but you also want to request a copy of your report with them. And then you can dispute the data that's on that report, just like you would with the credit bureaus.
And then still seal the document at the court.
Well, they're not going to have anything to do with the court. They are just the data furnisher. Whatever you do at the court should be your private business. LexisNexis should have no, connection between the two. That's kind of like, the whole thing is like, we do have a right to privacy, and LexisNexis is scraping the court records for data on consumers, and then they're reporting this data, so you can totally dispute with them. They make errors just like the credit bureaus do, and once that's off of their records, we don't know if it's caused other reporting agencies to have that data. I'm not sure. You'll kind of find out if you start applying for places. And if you denied, they have to provide you with a copy of the report that they used. So you'll see where the data is at.
Okay, I'll do that. But I have my Nexus report blocked. So I don't know how they still reported it, but I'm gonna pull it and see if it's on there.
Yeah, I would still request a copy of them. There's other data furnishers out there, right? LexisNexis is just one of the bigger ones. So you might also want to request CoreLogic, and pretty much like all of these third parties. I put a list in the classroom under the credit secrets, and if you go down to opt out, these are all of the consumer reporting companies. So there's ARS, Innovis, LexisNexis. the Sage Stream is like LexisNexis now, so I'm not going to really count them. But there's tenant screening companies as well. You know, they have data. There's, you know, Experian. There's all these different places that could have it. It's kind of tough in your situation because you don't really know who may have it. Clarity Services. This is another one that could potentially have it on file for you. So I would go through and request probably all the consumer reporting, ARS, Innovis, LexisNexis, their LexisNexis. And I would probably skip all of the tenant screening for now because there's just so many that it doesn't make sense. It's like, you know, too much. And then I would request Clarity Services. Microbill, I would request that because they can get rent information. I would start with those and see what you find because they all have to provide you with a copy of your report for free. And, you know, if you have any other ways of, you know, asking them who they reported to, that could help, right? But if you just see it on TransUnion, it might just be there, but usually it's on one of these tenant reporting places too. So
I'm
time
gonna
will
check.
tell.
I'm gonna check. How did you get to that screen? What did you
So
type in?
inside of the classroom section, and if you're looking on your phone, it might look a little different, but inside the classroom section, it's the very first course here, the Credit Repair Secrets. And then if you scroll all the way down to part 26, this is the opt-out and, you know, these third-party data furnishing companies.
Okay, I got it. I wrote it down. I'll look at it tomorrow.
Yeah, it's worth a stab. You know, you just never know what they have on file for you. And it's always good to just be prepared versus not being prepared, you know?
Mhm.
And while you're working on everything, you might as well see if there's anything else that needs to be done.
Right. Okay. Well, thank you.
Yeah, absolutely. Any other questions for this evening?
I have a few questions.
Sure.
Okay. So, you know, we've got a lot. We've done I want to keep this short because I know everybody wants the rest. We have opened up 4 credit unions: Navy, PenFed, NASA, and Randolph Brooks. As I told you the other day, Navy Federal, because of the name of my company having to do with stock loans, even though we don't trade or, you know, we're just a high ticket consulting, okay?
Mm-hmm.
We're the ones that sources the borrower. So, you know, we got to work out details later on down the line with Navy Federal, but we do have our personal savings and pledge loans set up. PenFed don't do business accounts, so
Yeah.
I'm working with NASA and Randolph Brooks right now vetting. We're going to find out now. NASA does business accounts, business checking. We just got to get the business checking set up. Okay.
Mm-hmm.
Now, it's one of the 5 tools that we want to use, you know, savings, checking, CD, pledge loan. Um, right now, we've also done the loan with Bank of America. My question is, that's my primary company account. Now, can I do my pledge account or can I do my direct pay from Bank of America to Navy Federal so I get that direct deposit?
Mm-hmm. Yeah, absolutely. A lot of times you can split up your direct deposit via percentage. So you can put, you know, a certain percentage, even if it's a small percent into Navy. that's fine. As long as it's something consistent, they're happy with that.
Okay. Yeah, we can just, because Olivia has an account and I have an account. We can do 50% to Navy Federal, and
Mm-hmm.
I believe I'm going Monday over to NASA. I got my NASA approved today. Both of
Nice.
us did. Okay, so we're gonna go over to the co-op branch in Fort Worth to I got to find out about my member. I don't see that they because we just got approved today for the savings. I don't
Mm-hmm.
see it. I haven't been billed or anything. I'll find out Monday about the membership. Okay. And hopefully we're going to be able to do a business checking with them. If not,
Yeah.
I'm gonna go to Alliant. I'm gonna go. You know, it's not going to hurt me to have 6, 7, 8 credit unions as long as I have all the bells and whistles. The CD, the money market account. Like we talked about the other day.
Yeah.
Till I find one, correct?
Absolutely. I mean, you want to be careful because you don't want to probably go for more than like 6 at a time, because every time you apply for a bank account, you do get hit with an inquiry on your banking reports, like check systems or early
Yes.
warning, right? So you don't want to have too many too quickly together. But
Okay.
I would say 6 is probably the max at one point, and then wait about 6 to 12 months before you open up any, because Navy will use early warning, so that's not going to be on check systems. But most of these others are probably going to do an inquiry on check systems for you.
Okay. All right. Well, I sent you a detailed email on
Okay.
everything that we did with Bank America, Bank OZK, Fort Worth credit unions, and then the 4 credit unions that we added. I got to find out some information. I'm gonna go into the classroom and study on credit strong. I don't know if that's something I need to do now, but you'll go see the itemized. I mean, look, we've taken a lot.
Man, yeah, you guys are taking action. That's awesome. I love it, because I'm
Uh,
telling you, the more that you can invest with time and getting it done now, so that way you can have more time with the credit unions, it makes it that much more valuable, because it's a slow play type of relationship with these credit unions, you know?
yes. Well, so just you can go read your email. I gave you a pretty detailed update on where we are. I don't know if that was an automated email that you sent to me about wanting to do a check with us on an update, but I sent it to you before the program tonight. Olivia has signed up to the 497, and I'm new at this, so we went ahead and signed up for another hour of consultation for Tuesday.
Okay, awesome. Yeah,
And
well,
we'll
I'll definitely take a look at the email, and then we'll connect more on Tuesday. But I'm really excited for you guys, because that's like a whole lot of action, and it just helps out tremendously, because of the fact that now we've got some options going, we've got some credit being built. In the next 30 to 45 days, we'll start seeing all these, you know, credit accounts that are positive start popping up. So that's exciting. That's super exciting.
What's your opinion about Goldman Sachs? I'm looking at my notes here. Um, I don't see their business checking at Goldman Sachs. It's
No.
Norman something. Uh,
Yeah, not anymore. On the business side, Goldman Sachs used to have the GM business card. That was a pretty good card for people. It was just a credit card, but unfortunately, the GM personal card and the GM business card have been canceled.
yeah, they have another company. I'm looking at my notes that
Yeah, Barclays took them over.
right. Yeah, if you saw my notes, you look at it and go, damn. We've been, look, I was on the program last night with you, which was very great. Um, so, all right, check my email.
Yeah, I certainly will. And then we'll connect more on Tuesday and follow up about things.
Well, we're new at this. I don't know if anybody, Stacy, I'm impressed with her knowledge. Wow. I feel bad about her luck,
I
but
know.
I'll say this. Fortunately, um, we did not have to go through the nightmares of, going through a lot of coaches. You happened to fall in their lap at the perfect time. Um, there's no doubt with all the data that's in your classroom, all the videos. Look, you've worked hard at this. We're very blessed that we're a part of your team.
Oh, I'm so thankful that you guys are here, and I can't wait to see your guys' success, because look at how much action you guys have already been taking, and it's only just been, a short period of time. So thank you so much, and we'll definitely connect more on Tuesday. But great job so far.
We're planning on flying out to California and meeting you.
Oh, awesome. I can't wait.
Is that all right?
Yeah, absolutely.
Okay. All right. Well, blessings to everybody, but we're very grateful to be with you.
Yeah, well, we're happy to have you. Thank you so much.
All right. Thank
All
you.
right, take care. All right, guys. Well, thank you guys all for being here. I appreciate you. I'm going to get these replays edited and hopefully out sooner than later, but I've got some more videos that I'm going to be posting into the classroom section that my editor is almost done with. So I'll be posting those in the community and then working on some new presentations for our next call. I've got some good things cooking up based on the recommendations that I got from the post on what you guys want to talk about. So I'll be working on some things. If you have anything that you want to talk about in particular, feel free to email me, or things that you need to cover, feel free to email me and I can work on a presentation for that. Or if you're not clear on some things, I can work on a presentation, or if we already have one, I can share that with you guys. But thank you guys so much for being here. I'm going to wrap it up. It's been fun for the last couple days. And until next time, I will see you guys on the next call. Bye, everyone.